How to consistently grow a small account. My name is Don Kaufman, and you are watching a TheoTrade presentation. Here is a formal risk disclosure. We're not financial advisors, nor a broker-dealer. I always throw this up here because I spent approximately 15 years in the brokerage world. Talk about that background here in just a minute. I also love this final thing over here. No soliciting, no recording, no photography, and we should put in here, do not feed the monkeys. Next over here, this is a copyright disclaimer. One of the primary reasons I throw this up here. Listen, after this evening, if you need to get a hold of us, first of all, our TheoTrade office is located in Scottsdale, Arizona. You know, why Scottsdale? Because I did my time in Chicago, and I am done with it, people. Oh, there's nothing like February in Chicago. I worked there and commuted back and forth for quite a number of years from like Arizona to Chicago. Oh, come on. Chicago's wonderful in February and March. Nevertheless, we're located in Scottsdale, Arizona. If you ever need to get a hold of me after tonight, and this is important to me, and I always reiterate this, okay? You can email. I will answer your email. And I'll talk about that throughout the course of the evening. You need us? We're there. Support at TheoTrade.com. Now, we use a common inbox, which effectively means everybody emails to support at TheoTrade.com. If you need to get a hold of me, just put Don in the heading. It'll get to me. That is the way that we actually handle a huge amount of the number of support requests that come in here at TheoTrade. All right. Next on the docket this evening, okay, this is why you're here. I mean, you got to ask yourself, you're going to spend the next hour and a half. Is that okay with everybody? Because I'm probably going to run a little bit long. I like to say that right up front. You know, I have a lot to go over this evening. So listen, anytime I do a webcast like this, okay, and I tell this to people constantly, like, I want you to be able to walk away with something definitive, knowledge that you can use literally tomorrow. So one of the first things that I'm going to cover here tonight, why traders and investors alike outright fail with a lot of the different strategies they embark upon. We're actually going to look at a variety of different strategies, and I'm actually going to show you some fail points. You'll understand why I'm going to show you failure points. Everybody's like, just show me what works. Yeah, well, unfortunately in this business, you have to also, get a handle on, why, maybe you've gone down a dark path. All right, number 2, why you need to be cutting risk. Cutting risk is critical, especially right now. Everybody right now is, thinking to themselves, I'm the next Warren Buffett. You could buy anything in the S&P 500 right now, and it's up. Anything in the S&P 500. You know the irony of that? You can buy companies that have filed for bankruptcy right now, and they're up. Okay? Chesapeake Energy, maybe. Hertz. Okay? These are stocks that have literally, they filed, people. It is over. And the stocks are actually going up, which eventually those shares will be canceled, completely canceled. We're actually going to teach you to cut risk in order to produce consistent 55% plus returns surrounding very high probability movements in any stock, any ETF, if you're into ETFs or index products. Number 3 over here, learn how to grow an account with high degrees of consistency in a world filled with volatility. The word volatility, that's one that we haven't had to deal with that much in the last almost decade. Well, guess what? Volatility, it's not going away. Number 4, how you can trade without having to continually monitor positions. So I'm going to detail a specific strategy, and then I'm also going to show you an order type. That's what we call kind of a set and forget. It's good till canceled order type with a really, again, high probability strategy kind of coupled with it. Again, if you've never been to a TheoTrade presentation, okay, sit back, make sure you're well caffeinated. I don't care what time it is at night. And you're going to learn a lot tonight because I am going to fly through. I've got a huge presentation in store for you. Our gift to you tonight, stay with me until the end of the webcast. As a gift, okay, for staying with me to the end of the webcast, we're actually going to provide you an auto expected move indicator. Now, this is an indicator that I'm going to reference throughout the course of the presentation this evening. This is actually the single most advanced indicator, okay, scripted. And the indicator, it's literally going to change the way that you view the marketplace. And I'm actually going to show it to you again. right at the end of the webcast, because everybody always asks me this, like, when? Okay, literally, at the end of the webcast tonight, one of the things I'm going to do, I'm actually going to give you a link, right, to a specific web address, and we'll give you the auto expected move indicator. I do, of course, want to share it with you and show you precisely what it looks like. You know, people talk about things like overbought and oversold. What the auto expected move indicator happens to do, and I'm just going to highlight this. I'll read this to you, but auto expected move, they're ranges. They're derived from the options chain. And what the auto expected move does, it says like the options marketplace. I know not everybody here looks at options, but the options marketplace indicates that this stock is supposed to move $8. Okay? And if the options marketplace says it's supposed to move $8, it's supposed to move $8. What happens if it actually breaks out outside of the expected move? Okay? And the cool thing about the expected move, it is a forward-looking indicator. And again, it's totally going to change the way, though, that you view markets. And if you look, you know, back here, and by the way, this is the mother of all products. This is the spiders. This is the S&P 500, right? You're looking, okay, at the S&P 500 here. And what I wanted to show you is, look, here's a huge crack outside the expected move, only to see us actually rebound higher. We actually broke outside the expected move, only to see us actually go lower, okay? Again, here's a crack outside the expected move. We jump higher, and I could just point out all night long, okay? It's not about overbought or oversold. It's statistical ranges. This is what we term a quantitative tool, and I will show you a little bit about it. And there's so many things you can do with this expected move. And by the way, the expected move, it works on literally on every single liquid stock, all right? Every single index that has options, okay? And you're going to be able to use this. And I think you guys will find it pretty fascinating. It's auto expected move. Again, I'll detail it a little bit towards the end of the presentation as well, because I'm going to use it tonight. And you're going to ask, like, how did I come up with these trades? Well, some of the trades that I'm going to come up with here are my auto expected move. All right, a little bit of a housekeeping item. Housekeeping! Listen, tonight I'm going to fly through, I think we have a pretty in-depth presentation. I strongly suggest, as I said a moment ago, get your caffeine, get ready. You pay attention during the following course material, whatever it takes. Shut the door, turn off Skype, chat, get rid of the Facebook, phones, put them on silent mode. You really don't want to talk to those people anyway. Kick out the kids. Definitely kick out the kids. Grandkids, the dog can stay. Listen, this is a skill set. It's going to be fairly intense. You took the time to be here. This is important. Focus on being here. And I also tell everybody, okay, you don't come here to learn stuff that you've already heard in the marketplace. You come here at TheoTrade, okay, because you want to be challenged and you really do want to learn something. And I hope you guys will appreciate that throughout the course of this evening, because again, I'm going to throw some great topics at you. All right, here's a little bit about me. This is a little bit about my background. All right, I watched order flow for 15 years. It's a big portion of kind of why I'm here. And people have no idea. Whenever I mention like the term order flow, I mean, how many that are tuned in? And again, I always say, like, these are not rhetorical questions. Jump in. How many people actually know what order flow even is? Because most people, they hear that term order flow and they're like deer in the headlights. Listen, I'll give you my background. So I grew up around traders. When I was a little kid, my uncle was a market maker in Chicago. And I actually grew up in New York, and he moved from New York, moved his whole family out to Chicago. He started a trading firm in the early 1970s. That firm, he started with one seat on the Chicago Board Options Exchange in 76. By 1983, just a few years later, he owned over 500 seats on exchanges around the world. The firm was called O'Connor & Associates. It was actually hailed as one of the greatest trading firms of all time. It was actually bought by the Swiss bank in 1992. So you got to recognize I grew up kind of around traders. And even though I didn't spend like every single day, with my uncle and so forth, obviously I had an interest at a very early age. And when I got into high school, I got even more interested. Well, in college, 3 weeks out of college, I got a call, and I was on the phone with one of my cousins, and he said, listen, we could use a clerk on the floor. That was 1998. The rest is pretty much history. So I started trading in 98. Short-term time after that, I made markets. I moved upstairs to be a risk manager. And only a few years into the professional side of my career, I was actually invited by a couple of guys I knew from the trading floor, and I was invited to a startup brokerage firm called Thinkorswim. Now, some people may know Thinkorswim, maybe you don't. I was at Thinkorswim pretty much from the onset in 2001. I ran and built the education division of Thinkorswim, and I was on the executive team in 2007 when we took the company public. We were acquired by TD Ameritrade in 2009. By 2010, I actually went on to run all of TD Ameritrade's education. We had 7 million clients at the time. And that's a little bit about, me. It's about my background. One of the most important things, I had access to retail order flow and the largest retail order flow in the entire industry. Basically, that's as nefarious as it sounds. I could see everything that you did. And more importantly, if you are the individual, okay, that ran education for the biggest options brokerage firm on the street at that time, wouldn't you want to study what other people are doing to make your education better? And that's exactly what we did. We used big data. By the way, I don't want you guys to think it is nefarious. We didn't go in there and go like, hey, what did Mike do in his account? That's not the way it went down. We studied big data. If you give me a trade, if you give me a strategy, we ran it. We actually ran data and say, does this work? Did this work? Did this work? Did covered calls work over time? If somebody just bought and hold, does it really work? And the answers that we got were absolutely phenomenal. What you're going to learn specifically tonight, in large part, comes from watching billions. I call it and others mistakes. But more importantly, the knowledge of what works best for retail traders. Now, when I talk about retail traders, that's you. That's me. Okay. I know a lot of people out there, they're like, this market maker did this. Listen, I made markets. Market making is completely different than what you're doing in this business. And you should know the difference. Okay. I know what works for retail traders because, again, having studied 7 million brokerage accounts, okay, for a period of over 5 years. And prior to that, we were already studying Thinkorswim accounts. Okay. Gives you a pretty spectacular kind of background knowledge, again, of what works, what doesn't, and watching other people's mistakes. So it's a little bit about my background. I do the occasional still TV appearances. This is actually in studio at TD Ameritrade. They still have me on TD Ameritrade's network. Oh, probably once a week, once every other week at the least. CNBC. I've done a few tours on CNBC. I try not to do CNBC too often. It's a bbit more challenging to do CNBC. You have to actually go to a studio. Not fun. This is one of the more memorable appearances. It's myself versus, the man himself, Kevin O'Leary, the shark. And I always say this, but I got to tell you, this particular interview, we got delayed by a half an hour. We got bumped by, there was some news breaking. So we got bumped. And we were actually in different cities staring at each other. And we had about a 30-minute conversation. That guy could not be a nicer guy. I don't want to ruin it for you, but I think it's, he really is. He is Mr. Wonderful. He was a great guy. Got a lot of good ideas from him too. And then we went at it, of course, live on national television there on CNBC. So this volatility got you down. I throw this in here. Okay, volatility. Does it have you down? Most people right now, they're like, no, man, the market's up. I mean, the S&P 500 right now is flat on the year after everything that we've been through. And, 2020, I got to tell you, I've been in this business a long time. I've been in this business 22 years, and I've seen some pretty serious stuff, okay? And this is right up there, people. I mean, you got a marketplace that's literally flat on the year with more bad news than anybody's ever seen in a marketplace. But what I want you to know is first of all, this volatility, okay? Don't let it get you down. And I am going to also say this, volatility, this is just the tip of the iceberg, okay? Whatever you might think about the marketplace, put it aside. There's one reality. There's going to be more volatility, a lot more volatility. How do you know that? You only have to listen to the Fed, which, by the way, the Fed will be out tomorrow. Only have to listen to the Fed. They're actually going to be shifting in terms of volatility. Okay, do not let volatility get you down. This is the time, people. This is your time. And I cannot state this enough. This is the time where people make money when it's volatile. Volatility is your opportunity. Just to show you, okay, what happens in extreme markets. It's a couple of weeks ago, but I wanted to highlight it. I'm going to show you a couple of weeks ago, and then I'm going to show you some recent trades. A few things that you guys need to know about me throughout the course of the evening. Oh, for 15 years working at a brokerage firm, they don't let you show your own account. Okay? here at TheoTrade, I'm not working for a brokerage firm anymore. I can show my account. This is my account, all right? The account that you're looking at right here happens to be none other than, let me change the color so you guys can see this a little bit more clearly. This is an IRA, okay? This is actually a retirement account, and this is quite the little run that we went on in the time frame. Again, if you're reading this, this is a net liquidating value. This screenshot is taken from the Thinkorswim platform. Okay, so it's literally taken directly from the Thinkorswim trading application. And so I'm familiar with it. And this is the net liquidating value. Again, this is February 23rd, 24th, 25th, 26th, 27th. Okay, and then I actually showed you the corresponding month, literally 1 month into the future. And we went from, well, here I am. This is my personal IRA, $211,000. Okay, obviously having a pretty crazy week in the beginning of February, or should I say the end of February. Then towards the end of March, we went on another fairly spectacular run, taking it from March 20th to March 24th to $308,000. So there's, again, the reason I use the IRA in here, that's what I trade in predominantly on a day-to-day basis. So that's my IRA. It's basically added about $100,000 in a period of just under a month. So that's what's possible in the midst of volatility. And before I dive too deeply into some of the trades, okay, I also want to show you this. I'm going to display trades to you throughout the course of the entire evening. All right, this is an XLU. If you're unfamiliar with XLU, let me just get you familiar with what you're looking at right now on the screen. Okay, these are all live trades. This is not simulated trades. Every single one of these trades, okay, was done live, was done in my account. This is actually how I produce some fairly phenomenal returns. I'm also going to show you strategy tonight that's the consistency behind this, okay? And it's critical. The XLU is the utility sector. What you're looking at here is a screenshot. I just copied and pasted directly, again, from the Thinkorswim platform. How many of you guys are familiar with Thinkorswim? It's okay if you're not, right? How many people are familiar with Thinkorswim? Just a Y or an N? Yeah, yes, no, maybe, maybe so. If you're familiar with Thinkorswim, great. If you're not, it's okay. Almost everybody in here is. All right. So on Thinkorswim, this is a screenshot from it. This is an XLU. This is called a risk twist. Now, this is an options trade. Okay. Nevertheless, I started with a 96-cent debit. So basically, every $96 I invested, I got back $1,272. It's a 1,225% return. By the way, on this trade, you don't have to do $96. You could have done $960 to get a $12,720 return. You could have done, $9,600 to get what? $127,000 return. So you obviously can add zeros to this, but I thought it was only fair, to show you, when somebody goes from one screen and goes, I made $100,000 in the marketplace. Well, that's all well and good. How'd you do it? All right. Risk twist spreads. These are types of like ratio spreads. And you can see the exact date and time of the execution. All right. So this is put on obviously February 7th, taken off March 12th. The next one, this is XHB. What is XHB? Anybody know? It's the home builders. It's the home builders. Put this on for a 53-cent debit, exit it for $3.62 credit. All right, so it's every $53 I invested, I got back $362. It's a 583% return. Look at the time frame, people. That's only 1 week. Okay. By the way, I didn't know. I want to make this clear. I didn't know what a coronavirus really was. I mean, we all heard about it by February, but don't think for a second that I put on this trade because I thought the marketplace was going to tank. Right? That was not, my timing on here was not part of the skill set. It was, and again, I'm going to show you that it was the right trade to do. And that's just the bottom line. The expected move indicator, okay, had a lot to do with this particular trade. So that's those are two trades that happened obviously back in February. Let's get a little bit more recent. This is a back spread, IWM. Okay, what's a back spread? Oh, similar to what I just showed you. Here, entering on March 23rd, exiting March 26th, put on for a 20-cent credit, exited, okay, for a $6.48 credit. That, people, is what we call a grand slam home run. And that one was actually done again in March. As I said, I want to get a little bit more current because I don't want you guys to think like, hey, these are trades during. Look, this is an IWM back spread. This one a little bit more current. April 24th, closed April 29th. Every 43-cent credit. So it's $43. Every $43 I invested, I got back almost $5. It's $4.97 credit. Okay, so this trade, the back spread was actually put on for a credit and taken off for a credit. Don't get me wrong, there's risk in this trade, but this trade made approximately, okay, almost $5.50 in a period, again, of 5 trading days. And this one, all right, just to show you a little bit, this one was actually done in front of, I like to say, a live studio audience. Now, this is actually done in front of clients. All my trades are done in front of our clientele. So this is Jim, IWM out at 202. This is an individual IWM out at 438, which is a Grand Slam home run. This is Judd, okay? He actually closed his spread. This is the exact spread, by the way, that I did, the exact date and time, okay? Opened 43 cents, sold for 213. This is Corky here, out at $1.93. This is another gentleman, Len Yu, okay, out at 228. So I wanted to give you a little bit of background before we actually got jumped into it. You know what? I've got one or two more. Again, I like to show you stuff that's more recent. This is the XLF. What's the XLF? Okay, the XLF is the financials. This one's actually put on for 0, meaning I didn't pay anything, no debit, no credit. I exited for a 51-cent credit. That doesn't seem like that much. You're like, it's not that big. I like that other one. That was $5. Yeah? Okay. This is a $22 product. This is only a $22 product. Like, it's a stock. It's $22. It's actually an ETF, but it's $22. We just pulled 51 cents out of. Okay. If you didn't like that one, the XLF has been hot lately. Okay. How's this one for timing? All right, so here we are. We're less than a week past this trade. I put it on for a 25-cent credit, but I took it off for an additional 26-cent credit. So ironically, I made approximately 50 cents on this one as well. And as stated, all of these trades are put on, again, in front of our clientele. This is John Haggerty, 570% gain. XLF back ratio was a nice winner. That's Perry. Wilhelm, Don, new here. XLF and Baidu back ratios. I did one in Baidu as well. Batting 1,000. Close my XLF. Thanks. Okay. And Randall, I got out of my XLF at 204. This guy absolutely crushed me. He got a much better fill than I did. Last but not least, here, this one also closed just recently. This is the EEM, the emerging market, okay? And this one was put on for an 18-cent credit, closed for a 37-cent credit. Again, very negligible amounts of risk. This is only a $40 product, okay? Where, again, these trades have very negligible risk with some really high rates of return. The reason I wanted to kick that off is because people get knocked around a lot in volatility. And I'm telling you, okay, listen, we're going through an incredibly difficult time. And in markets, they've been the best time, okay? Listen, this chaos that you're seeing, you can't forget that this volatility is good. And that's exactly what I wanted to display to you. You got to remember, no matter what you're about to go through in this business, volatility is good. All the chaos that's going on inside of the news that you pretty much have tuned out to of this point, volatility is good. One last aspect before I go deeply into some of the strategies. I thought that this one was not just interesting. This is possibly the most important thing that I could detail to you tonight. As I was saying a moment ago, this is the time, people. Like, this is it. And you're like, well, I don't really get it. Let me show you. This is, okay, TD Ameritrade. And again, I work there, and that's why I am showing you this. So this is TD Ameritrade. And what we're showing you in here, okay, down below that's highlighted is the number of trades done per day. So the bottom line, the number of trades done per day, this is in thousands. So what I wanted to show you is back here in September, markets are pretty good in September, right? They were doing about 810,000 trades a day, right? And by the way, I've been out of TD Ameritrade. I exited TD Ameritrade in 2015. It was great. And I'm still in touch with everybody over there. But I wanted to show you, this firm was doing 800,000 trades a day, which is still a phenomenal number. In October, they went commission free, and they jumped to 900,000 trades a day. And then by November, they were doing 1 million trades a day. And by December, people love free commissions. They're doing 1.1 million trades a day. By January, a little more volatility. So they were doing almost 5 million trades a day. Time out for a second. Holy smoke. These people now, you're doing 3.3, million trades a day right now. You tell me this ain't the best time in this business Okay, I'm going to tell you, you're nuts. No one in their right mind ever dreamed of a number like that. It's 3.3 million trades are being done every single day at one firm. That's before they merge, okay, with Charles Schwab. It's insane. And that's, again, in large part, this people is what's driving a lot of the marketplace. My concern, and the reason I'm showing you this, these people doing 3.3 million trades a day, let me say this eloquently, ain't got a clue what they're involved in right now. Not a clue. And all of them, this is the time where you could just throw money at the marketplace. And you know what? Over the last 12 weeks, it's been up, okay? Until it's not. Listen, risk. You got to understand that your money is on the line, and it is real, okay? And you're also going to figure out sooner or later how you handle your risk is directly correlated to your success in the markets. Too much risk, you're probably going to panic. You're going to close positions continuously at the worst possible time, but at least you're consistent with your panic, okay? And I'm going to position that to begin with because most people here recognize what I'm talking about. The moment we go through another volatile patch, okay, what do you think people are going to do? I mean, really, we start hitting a little patch of volatility. Here you are right there, okay? It is not, people, it is not going to be good. Not good at all because everybody's going to panic out there. Listen, this comes from experience. I've looked at hundreds of thousands of accounts. I know what works and what doesn't. Unfortunately, watching what's going on in the marketplace right now, today, watching people buy bankrupt companies. Do you have any idea how painful this is for me? Okay? Because all I'm doing is like watching a bad movie and I'm like, lady, don't go in there, lady. Okay? There's an axe murderer. You know that. That's how bad it is on a day-to-day basis right now. I'm telling you, what is wrong with the marketplace just gets repeated over and over and over again. It's like watching this bad movie. Listen, what works? That's what we're going to talk about. We're going to talk about what works tonight. We're going to follow a system that has been sourced from hundreds of thousands of people just like you. Okay? We got to cut losses and use a repeatable strategy to obtain incremental returns, right? You got to first get to incremental returns before you can start hitting, okay, the cover off of the ball. Successful trading strategies are going to exemplify the following principles. And I'm actually going to dig into some following principles. So bear with me here, okay? All right. Principles of building a trade. And it's the first time that we're really getting into some strategy here. Follow very, very carefully. Trade logic, capital allocation, directional bias. Okay? Trade logic, capital allocation, directional bias. At this point, people are like, what's he talking about? Okay? This is the principles of building a trade. This is how you're going to approach everything. And as I said, tonight, I want everybody to, when you're coming out here and you're learning something, okay? Again, I want you to be able to walk away with definitive, knowledge tomorrow. I want you to think about this every time you approach anything in this business. Trade logic, capital allocation, directional bias. Let me explain precisely what they mean. Trade logic. Place strategy and trade logic first. You're like, what does this mean? It means logic, right? What does that mean? Listen, the vast amount of people in this market, okay? Most people, they're infatuated with, what's going on, what's going up. You turn on CNBC, okay? You got Bob Pisani on the floor of the New York Stock Exchange. Wait, right now you probably have Bob Pisani hiding in his closet, but neither here nor there. A lot of us are still quarantined. But, everything is about what do you think is going to go up? What's going to go up? What's going to go up? Everything that people are involved in this business is about market direction. Okay? Listen, the way to present this to you, do you think, and really logically, do you think that some of the biggest trading firms on this planet, do they walk into the marketplace and they go, I think this stock is going up? I mean, do they walk into like a meeting and they go, I think this stock is going up? Listen, people, there's a trade logic. Okay? They're not just out there like, swinging for the fences and everything they do. It's about strategy. And that strategy has got to be coupled, okay, with something. It's not just about like, I'm going to do this strategy. They have to couple it with established entry and exit criteria. Like they know exactly what they're going to do before they even step foot into their office every single day. Entry and exit criteria. You don't necessarily need to be right, okay, is what I'm getting at in picking a direction in the stock or the markets to be profitable, okay? Remember that. You do not necessarily have to be right. All right. I'm going to come back to trade logic in a moment. The next thing, capital allocation. Capital allocation is as boring and ridiculous as it sounds. What is it? How and where you allocate capital should be strongly considered as a viable portion of your trading methodology. How about this? I got a fun comment. This one always irritates everybody. You ready? You ready for it? Look, capital allocation takes precedence over being right. What I'm talking about, here's a stock, okay? You think the stock is going up. So what do? You buy it, okay? I bought it. Why did you buy it? Because I thought it was going to go up. It didn't go up. It went down. What did you do when it went down? I puked, okay? Anybody ever done this before? So I puked. Where'd you puke? Right here. What did the stock do after you puked? By the way, puking is what we call exiting the position. That is a technical term in this business, people, okay? The moment you exited the position, what happened? Market went straight back up. You're like, oh, come on. That's the conspiracy theory. Everybody has the conspiracy theory. Literally, they stopped you out here, and then the market ran up. Huh? Anybody? Am I speaking to myself? Come on, people. This is like therapy for the markets. Admitting it is the first step tonight. Nobody's ever done that before. Okay? Nobody's ever gotten out at the worst possible price, the worst possible time. Okay? Admit it. Okay? And by the way, this has nothing to do with your lack of ability. You were right. You just couldn't hold long enough. Why? Because you're overallocated. So don't give me this garbage that I gotta be right. Okay? No, you gotta be allocated efficiently. Last but not least, directional bias. Listen, I'm not anti-charts. I'm just telling you right now, we recognize where you think a stock might go. Does not always mean the market's going to agree with your sentiments. That's like a dog hearing a new noise. Being right directionally, it can't define you. Don't let it define you as an investor or a trader, because you might not be right often enough. Duration over direction. So how and where that you allocate capital can define not only losses, but it could be the defining factor in your overall success or failure in the markets. Our war cry, again, duration over direction. And what that means, duration over direction, duration over direction. You need to be capable of sustaining trades long enough to be profitable. You need to be capable of sustaining trades long enough to be profitable. Because again, it's not about your ability to pick the right market direction. Okay? If you can hold a position, you can probably be right? As long as you're able to hold it long enough to see the light of profitability. You want to be right, or do you want to be happy? And it's, obviously it's the famous phrase, okay? Do you want to be right, or do you want to be happy? I think a lot of us probably have not applied this to the marriage, but the logic works beautifully in trade. I'll always take that stance. You do not have to be right to make money in this business. Why? It's experience. Watching order flow for decades. It's taught us invaluable lessons. And when I say us, okay, TheoTrade is not just me. It's not just Don Kaufman here at TheoTrade. We have a very, very knowledgeable crew, which I will introduce a little bit later this evening. Many of which, some of them worked with me at TD Ameritrade. Some of them came from professional trading firms. Some of them were market makers, all the way back to the 1970s. Nevertheless, okay, those lessons we're applying to what you're learning here tonight. I mean, listen, have you ever been stopped out of a trade or bailed out of a position only to see the markets turn around shortly thereafter? Okay. I mean, everybody has. You get stopped out of a trade. Remember this. Always remember this about the word stop. Huh? See that stop? That's a 4-letter word. Never forget that. All right. Let's jump forward. Core strategy and trade logic. Now we're going to start to get a little deeper. Okay. Listen, the rabbit hole. Now you're going to be Alice tumbling down. All right. Well, tonight, I'm going to introduce you to one real world strategy. You'll be able to use this literally tomorrow. Okay. And you'll see this is going to be very risk averse. Now, as I jump into the strategy, first, okay, we have to talk a little bit about risk versus reward. As I said, this is going to get deep. Before we can jump into the strategy, you have to understand, okay, one of the more common mistakes as applied to trade logic. Okay, like I need everybody here tonight, all right? If there's one thing I'm going to just drive home to you, all right? I need you to understand, okay, what it is when I mention trade logic. So with that, we're going to talk about risk versus reward and we're going to apply risk versus reward. When I say risk versus reward, what am I talking about? I mean, risk 1 to be able to make 2. Okay, we're going to apply risk versus reward so you can understand common flaws in trade logic. So I'm going someplace with this, and I want you to understand that we got to build you up for you to understand the core strategy that we're going to teach tonight. So, by the way, the example I'm about to give you is one of the very first examples I ever learned in this business. Okay, I've used a very similar example for literally years of my career. Why? Because it's probably the most preeminent example that you could possibly use, and it left a mark on me. It really did when I first got involved in this business. Okay, so we're going to talk about going out there, right? And literally, how easy is this? Risk 1, right? To make what? 2. Got a question? Who here's ever done this before? Risk 1 to be able to make 2. Risk 1 to be able to make 2. So you go out there and you buy some stock, and what do? You risk a buck to be able to make 2. You risk a buck, make 2. Risk a buck, make 2. Sounds reasonable, right? Okay, let's break it down. So let's talk a little bit about the logic behind it. Nobody here wants to come in and say like, yes, I have done this before. I told you, admitting it's the first step, okay? This has got to be therapy for traders. We're going to debunk risk versus reward, okay? We're going to debunk risk versus reward. So let me lay out the big picture for you. You're going to go out and you're going to buy a stock. Let's make this you. This ain't me now. This is you, okay? You're going to go out and you're going to buy a stock. So you're going to buy, all right? And by the way, every example that I give is never a stock. It's stock. Why is it stock? Okay, because I have problems apparently. You're going to buy a stock, and you're going to buy that stock right at 28 bucks. Reasonable? So you're just going to buy the stock, and you're going to buy it at 28 bucks. Then you're going to turn around, and you're going to set a stop right at what? Let's make it 27. Come on, make it easy. This is the first example we're going to do. So you're buying the stock, and you're setting a stop order. What can you lose in this? Right? What can you lose in this? Well, if I'm dead wrong, I can lose $1. This trade could be on for a day, it could be on for a week, but whatever, you get it, right? The stop's at 27. But then we're going to put a target price on the head of this thing at 30 bucks. So I'm risking 1 to be able to make 2. Are we good? Is everybody good? It's a prototypical risk 1 to be able to make 2, risk 1 to be able to make 2, risk 1 to be able to make 2, right? Okay. Everybody okay with this? Yeah, are we okay? So, what's going to happen? What's going to happen in this example? No, most people don't necessarily do this. When you look at this, what's going to happen in here? So, you're going to get stopped out. You're going to hit your target play. I don't know. Let's take a look. Probabilities in trading. So, I want to look at this exact example, but I want you to extract what you think is going to happen in the marketplace. When I say what you think, because I've done this example enough times, and I've been shown this example enough times, you've got the stock, and it's at 28, okay? You got the stop down here, right at 27, and you painted that target on its back, right? At what? 30. Okay. What's more likely, getting stopped out at 27 or making the $2 profit? In a normal volatility fluctuation. And it's really funny because whenever I ask this question, and I've asked this question, okay, to professional traders before. By the way, in my career, I, for a long time, taught retail clientele. That's you, retail, okay? But when TD Ameritrade first bought Thinkorswim, in 2009, they took me out of the retail world and they had me training professional traders. When I say professional traders, registered investment advisors. The bar to see me was $300 million. If you had $300 million or more under management, they fly me out to your office and I spend a day and I talk about logic and so forth. And whenever I did this example, and I would do this exact example, people would go like, so I had a Fibonacci on there and I got a MACD on there, and I'd be like, whoa. Calm down there, cowboy. Listen, if you do, 50 different trades and set them up the exact same way in a normal volatility fluctuation, what's more likely to happen? Okay, get all the garbage out of the way. What's more likely to happen? Go down a buck or up two. The bottom line is you see there's a much higher probability of hitting the stop than hitting the target price, okay, in normal volatility. That's the bottom line, okay? That's just the bottom line of it. But how much more? Okay? Listen. Options are probabilities. Now, I know that people tonight haven't necessarily looked at or even traded options, okay? Maybe you never looked at the options market. It's okay. But are you aware that options are based on probabilities? And this is what I used to teach these fund managers, okay, is that I don't care whether you want to trade the options. I really don't. But in today's business, don't you think you should use every tool afforded to you, okay? Whether it's your money, whether it's a client's money, you got to do this, right? Options can help us in determining the viability and practicality of any given trading strategy. How? Okay, let us look at what the probabilities are in the aforementioned risk one to be able to make two trading setup, and let's see if it's viable over the duration. Now, before I go on, I'm about to show you I'm about to show you a screenshot. And in this screenshot, you're going to get scared, right? Breathe, people, breathe. Okay? What you're looking at here is a screenshot. In this particular screenshot, this screenshot is taken today. This is, okay, the Thinkorswim platform. By the way, Thinkorswim, it's TOS, stands for Think or Swim, right? This is the TOS platform. Here's Bank of America today. Okay, that's Bank of America was trading right at 28 bucks. Okay, right at 28 bucks. What I did on the screen here is I'm using options, and the options I'm using, okay, are the June 19th expiration. They're 10 days out. That's neither here nor there, because again, some people are like, I don't even know what an option is. Come on. How many people here have never traded an option before? Again, it's okay. Who cares? All I want you to do is grasp the logic. What's the logic? Well, we went out there and we bought that stock at 28. We set a stop at what level? Okay, we set a stop at 27. And we set our target price, so that's the 27 level, right? And we set our target price at 30. Well, here's the 30 level. I want to know what the probability of touching is. And people go, what? What's probability of touching? It's the probability anytime in the next 10 days of touching or exceeding a particular level. Probability of touching. Everybody's going, is that accurate? Oh yeah, it's dead accurate. If you do if you do the same trade like 50 times. Okay, when I say the same trade setup. If you go out and risk one to be able to make two, and risk one to be able to make two, and risk one to make two, and you do the same setup 50 times, guess what? The probability is to be dead accurate. What I want you to see is the probability of touching 30 is 45%. So you have about a 45% probability of hitting, okay, your target. Well, the problem is, though, you have a 68%, okay, 68% chance of hitting your stop. So what's going to happen more often? You're going to get stopped out considerably more. Now, what's going to happen to people is they get slowly bled to death. They lose $1, they lose $1, okay? All of a sudden, they make $2. They lose $1, they lose $1, they lose $1. All of a sudden, they make $2, but they're actually getting bled out and they don't even realize it, okay? Welcome to the marketplace. Risk one to be able to make $2. Listen, risk reward revealed. In the aforementioned Bank of America example, the probability of hitting the stop of 27 was 68%. The probability of hitting the target price of 30 was 45%. It's a prototypical risk one to be able to make $2 scenario is a setup for a low probability disaster. You're going to flush a lot of capital down the toilet bowl that way. By the way, you can look at the mathematics of this any way, shape, or form. Okay, you're not going to be able to circumnavigate the mathematics of it with a risk one to make $2 scenario. Why do I set you up for this? I set you up for this because you have to understand this, okay, to be able to move forward. I mean, to be able to move forward, you have to sometimes shed some of the garbage that you've heard in this business. And again, I cannot stress this enough. By the way, does this resonate with some of you? Okay, seriously, does it resonate with you? You could just say yes or no. When I say does it resonate with you, I can always tell if people trade. Okay, if you've traded, every single person that's done some action in this marketplace, right, and you've traded before, you'd be like, holy crap, how come nobody ever showed me this before? I don't know. Maybe they, people like, there was somebody that in a minute ago, they're like, I don't even have Thinkorswim. You don't even need Thinkorswim to have probability of touch. Probability of touch is on E-Trade. It's on everything now. Everybody has probability of touching, but nobody knows what it does. That's why I wanted to cover it. Nobody knows what it does. Okay? Listen, we got to position you and your portfolio with the right trade logic. Let's get down and dirty. How do you position yourself? Okay? You got to do this right. How do you position yourself without exposing yourself to drastic risks? Because right now, or a low probability, right now, risk is going to be your enemy. You have a marketplace that's going straight up. People are buying bankrupt companies. Okay? I think that we can start to call what's going on in the marketplace. And when they start buying bankrupt companies, literally Hertz is a bankrupt company. It will go to zero. All right. Chesapeake Energy is a bankrupt company. It's going to zero. We're hitting abject stupidity in the marketplace. You better mitigate your risk. You better control that risk. And we're actually going to show you right now a trading strategy. Number one, it has to overcome the high probability being stopped out. We're going to kill the idea of a stop order. Number two, we're going to define your risk. Okay. Pretty much come anything. I don't care how bad the volatility gets. You're going to know precisely what you can make and precisely what you can lose. Okay. Number three, provides a high probability of success. What does that mean? Well, I'm going to show you exactly what that means. High probability of success. Number four, limits capital exposure. Now, you would think limiting capital exposure and defining your risk are the same thing. They're not. Limiting your capital exposure means, do you want $100 at risk? Do you want $200 at risk? Do you want $300 at risk? You can actually fine tune each and every trade to precisely a dollar amount. That's limiting capital exposure. On top of it, you can further define the risk. You can say, okay, of that 100, I want to lose X. Now, number five, you're never going to need to buy or sell the stock. We don't have to necessarily buy or sell the stock. That's where what? Okay, listen, we got to hit on these 5 principles. We got to hit on these 5 principles to make this stuff work. That's what we're going to hit on options. Enter the in-out spread. In-out spreads, what they're designed for is to limit exposure. But at the same time as limiting exposure, you got to maximize potential, but with minimal movement and an underlying. Yes, this is options, okay? I said it, people. I said the O word, options. Now, a lot of things, about options, okay? But don't fear. Options, spreads, allow us to limit the risks. Bottom line, we don't have to use stop orders, and it'll provide considerable upside potential. Why wouldn't you do that? I mean, would you rather go out right now? I guess the great question, and I'll show you a trade a little bit later on this. Would you rather go out right now and buy Amazon? What is Amazon right now? It's a 2,000 blah 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 stock. Look at the S&P 500. The S&P 500, it's 3,200. Okay. Would you rather go out and buy a $3,200 product? Would you rather use options and limit your risk to say $500? Okay. Because that's exactly what this spread is going to do. And by the way, it doesn't even have to be $500. You can limit risk to $100, right? I'm pretty sure that people are going to get comfortable with options. Now, if you understand options, okay. By the way, I have an Amazon example. I don't want to give it away. I don't want to throw the price in there and give away the Amazon example because I have one tonight. If you have experience with options, hang with me for a minute or two because I can tell you what, you're going to pick up something. Okay. For those of you that are brand new to options, come on. Admitting it's again the first step tonight. Who here is brand new to options? Knows nothing about options? Anybody? Know nothing about options? Okay. It's okay. Come out wherever you are. If you're brand new to options, I just want you to grasp bigger, broader strokes of logic. If you've been around the block a couple times, you've traded some options, then you need to grasp some more of the detail, right? So as I said, hang with me for a minute because I'm going to teach just a little bit about the basics over here, and then we're going to go into a little bit more extreme. So this is in-out spreads explained. Let's assume that we have a stock, okay? And again, every stock in my book is called stock, and it is, okay, we're not buying the stock, but let's say the stock is trading for, let's just make it $200, right? Everything's trading for $200, okay? Nobody in here came in. Come on, who trades options? Who trades options? Who doesn't trade options? Yes, I trade options. No, I do not trade options. Again, they're not rhetorical questions. Otherwise here, people, I'm just talking to myself. Just the guy in a room talking to myself. That's no fun. All right. A couple of people have traded options. All right. Oh, I like it. Okay. Excellent. Not yet. All right. If you haven't traded options before, it's fine. Again, big strokes of logic here. I'm going to start off easy. We're going to go out in this example and we're going to buy an option. We're going to buy in this first example a 199 call. And the 199 call in this case, is going to be trading for a whopping, you ready? You ready? $4. Okay, it's going to be trading for $4. Now, that's the 199 call. Now, with the stock at 200, it's trading for $4. Now, for those of you that have never traded options before, I'm going to put that down below. We're going to put buy 199 call equals minus $4. Now, options are good for a period of time. It could be good for a month. It could be for 2 months. It could be 6 months. It could be 1 week. Let's make this one. I'm going to put it way up here in the header. Let's just make this one good for 1 month, just to make the first example easy. So we're going to buy a 199 call. Now stop right there. Time out. If you're brand new to options, you have no idea what a 199 call is. So I'm going to tell you what a 199 call is. A 199 call gives you the right, not the obligation, but the right to buy the stock at what level? You'll never guess. 199. So if you wanted to buy the stock at 199, could you buy the stock at 199? Yes, but you paid $4 for that. $4. Like that's more than a Happy Meal. Okay, so you're buying the 199 call, which gives you the right to buy the stock for 199. Let's actually take you through a couple of examples. Do I own the stock? No, I do not own the stock. I don't own the stock in any way, shape, or form. I've just gone out at this point and bought a 199 call, which gives me the right to buy the stock at 199. Now, let's say the stock goes all the way up here. Okay, by the way, this is a distribution curve. Here's the stock at 200. The stock could go down to like 100. The stock could go up to 300. Let's say the stock goes to 210 bucks. Okay, could it get up here? Let's call that 210. So if the stock goes to 210, you have a 199 call. Let me ask you, what's a 199 call worth? And if you're brand new, I want to know, what's a 199 call worth if the stock is trading at 210? You have the right to buy the stock at 199. Everybody else in the world has to pay 210 for it. Okay? So what's it going to be worth? It's going to be worth at least $11. And you go, but what if somebody doesn't want to give you $11? Well, you have the right to buy the stock at 199. Could you buy the stock at 199? Of course you could buy the stock at 199. That's what the option gives you the right to do. So if nobody in the world would do it, you just go, I exercise my right to buy the stock at 199. That would never happen because everybody knows this, but you could buy the stock at 199 and then you could sell it in the open market at 210. How much would you make? $11. You'd make $11. So all that a 199 call gives you the right is to buy the stock at 199. That's it. The problem with the 199? The $4. Why is that a problem? It's $4. If the stock stays flat, you're going to lose how much? Well, you have the right to buy the stock at 199. The stock's trading at 200 right now. You'll make $1 on that option, which means you're going to lose 3. What if the market goes down? What if the market goes all the way to 190? Who wants the right to buy the stock at 199 when the stock's trading at 190? Nobody. So what are you going to lose there? $4? That doesn't seem very good. Okay? This strategy is not just about buying a 199 call. We are simultaneously going to go out and we're going to sell, okay, a 201 call. And that 201 call is going to be trading for precisely $3. I'm going to put that down below. Before I explain it, we're going to sell that little monkey, all right, and we're going to sell it at 201. It's 201 call, and we're going to collect $3 for it. Add it all up. What'd you pay for the strategy? $1. Okay. Now, this is where a lot of people, they stop me. They go, wait, so you have the stock trading at 200. You have the right to buy the stock at 199. Do I own the stock? No, you don't own the stock. Forget about the stock. You don't own the stock. You just have the right to buy the stock at 199. But then you turn around and you look, he sold something. He sold a 201 call. How, Don, could you possibly sell something that you don't even own? See, options about rights and options are about obligations. If you buy a 199 call, you have the right to buy the stock at 199. But if you sell a 201 call, and by the way, you can do that. You can do it tomorrow. If you sell a 201 call, you're giving someone, okay, the right to take stock from you at 201. And because you're selling yourself into an obligation, you are obligated to give them stock at 201. Now, everybody loves the idea of the call. They're like, I sold it. I collected $3. But if you sell a 201 call, what are you? Obligated. Obligated to do what? Give somebody stock at 201. Do you own the stock? You go, no, I don't own the stock. So what happens if you just sell a 201 call? You have the right to buy the stock at 199. but then you're obligated to give it to somebody else at 201. So you'd buy the stock at 199, give it to somebody else at 201. What's the most you could possibly make in a $2 wide spread? What's the most you can possibly make in a $2 wide spread? Can't make more than $2 in here. You cannot make more than $2 in this particular strategy. Now, time out for a second. Time out. This is where things get crazy. What was your maximum risk in this trade? If you went out and bought that for $4 and sold this for $3, what was your max risk? Right here. Come on, what is it? That is it right there. See right there? Max risk. Let's put that up here. The max risk in this trade is $1, right? We're going to put that as max risk. What's the most you can possibly make in the strategy? Well, you can make as much as $2 because you have the right to buy the stock at $199, and somebody has the right to take stock from you at $201. So the most you can make is $2, of which you paid $1 up front. So what's the most you can really make? $1. That's the most you can possibly profit. So if your max risk is $1 and your max profit is $1, this is where people, they look at me and they go just boop, deer in the headlights. This is usually where the little hamster gets stuck in the wheel. All right. I like this. Daniel just said in the chat room, he's like, my head is spinning. Okay. This is good. This is good. I've had a lot of caffeine tonight. Could you tell? I have 3 kids. Like there's no other alternative, and they're little. There's no other alternative. I've been up since about 4 a.m, so we're going to caffeinate heavily, right? To be able to not only get you through this. This is important to me. Do you see it? Okay. When I say do you see it, now a lot of people go, why in the heck am I listening to this guy talk about risk a buck to be able to make a buck? Let's call it what it is. Risk a buck to make a buck. Risk a buck to make a buck. You go, why would I ever want to risk a buck to be able to make a buck? I don't know, because it works. Is that pretty? Well, Don, that's an excellent reason. Risk a buck to make a buck. Why does it work? Okay. See, people they don't see it up front. Here's a stock, and the stock's trading right at 200. Now let me really mark everything up. You know that your maximum risk in this thing is $1, and the max you can possibly make is $1. Okay. If we go up to 210, look, the stock literally goes from here and shoots up to 210. What's the most I can make? $1. That's it. You can only make $1. If the stock gets to 202, what's the most you can make? $1. If the stock gets to 205, what do we make? $1. If the stock goes to 300, what can you make? $1. But if the stock goes down, let's say the stock goes down to 190, you're like, oh man, this sucks. I don't like it. What's the most you could possibly lose? You tell me. What's the most you can possibly lose? If the stock goes to 190, what do you lose? $1. If the stock goes to, listen, if this is the next Chesapeake Energy, Chesapeake, by the way, it shot up the other day to $60, broke down to $30. It's a bankrupt company. But the point I'm trying to make over here, what happens if the stock literally goes to 0? What's the most you can lose? $1. So you go, so why is it okay? How am I going to make money, Don? I'm risking $1 to be able to make $1. This is where I say people don't see it. Okay, you put this strategy on. Now, I want to be dead serious for a second. You just went out and you put the strategy on, okay? When you put it on, the stock was trading right here at 200. The trade has how long? 1 month. You knew I put that up there for some reason, right? That strategy has exactly 1 month. A week into the strategy, 1 week into the strategy, the marketplace sells off. This is a volatile market. It sells off. The stock goes all the way down to 190. What do? Nothing. You don't do anything. Everybody's doing something. You're going to do nothing. Stock goes all the way down to 190. Why? But Don, I use my MACD, Fibonacci. You're like freaking out. You're like, what am I going to do? You have $1 at risk. Who cares? That was a week. The next week, stock rallies up to 202. You're out. You made your $1 of profitability. Do you see it? See, this is what people don't understand about risk reward. I said you go out and risk 1, okay, to be able to make 1. But what I didn't say, what's the probability in here? Okay? What's the probability of success in this particular trade? What's the probability of success? You're risking $1 to be able to make $1. But if the probability of making the $1 is considerably higher than losing the $1, then boom, we finally got something. You want to know where edge lies in options? Edge lies in options in the ability, okay, to hold the position. What did we tell you earlier? Okay? Duration, okay, over direction. The directional bias in this is dead wrong. Stock goes down, but it doesn't matter. That happened 2 weeks. Could I lose $1 in this? Of course I could lose $1 in this, but I'll tell you what, there's such high probabilities of us coming back. You have to see this, okay? Again, the whole strategy is about the ability for the market to move down. The market can move back up. So risking $1 to be able to make $1 is okay. So long as making the dollar, okay, the probability of, okay, success has to be incredibly high of being able to make the dollar versus lose the dollar. The question is, are you going to make a buck before you lose a buck? And the answer is you set this trade up right, and that's exactly what you're going to get. And that's what's important. We okay so far because we're going to keep going over here. Good? Huh? Everybody? All right? Listen. Let's continue with the Bank of America example. Bank of America. You know, what's funny is earlier, I'm showing you this example over here, and you're like, it's Bank of America. That thing couldn't have been a crappier choice. There's a reason I picked Bank of America. You know why I picked Bank of America? Because the stock was trading right at 28. It was just such a clean example. It sickened me. Bank of America. Is anything wrong with Bank of America? Yeah, it's a bank. Okay. But right now you could pretty much throw money at anything and it might work. Let me show you the Bank of America example. This is a real example. When I say it's a real example, this is real. This is a trade that you could put on literally right here, right now. Bank of America. So Bank of America, okay, is trading at 28. Bank of America is trading at 28. We're not going to go out and buy the stock. We're not going to use stop orders. I don't need no stinking stop orders. Okay. We're going to go out and we're going to buy a 27 call. Let me ask you something. What's a 27 call give you the right to do? It gives you the right to buy the stock at 27. Can you buy the stock at 27? And simultaneously, okay, you're selling a 29 call. Okay. This is why we call it in, out. One strike in, one strike out. One strike in, one strike out. Buying the 27 call, selling the 29 call. Paying what? Well, respectively, it's $2.15 debit, $1.15 credit. What did I pay for the spread? $1. What's the most I can possibly lose? $1. What's the most I can possibly make? Well, this is a $2 wide spread. What's the most you can make in a $2 wide spread? You can make $2, of which you paid $1 up front. So what's the risk reward in the strategy? Again, let's look at it. Okay, risk 1, right? Reward 1. Why would you do this strategy? I'll tell you why. This has 30 days. Let's say it has 30 days. Bank of America's $28 stock. Here it is. It goes all the way down, okay, to $24. What do? I'm panicking. Hold me. Okay. I mean, the stock goes all the way down to $24, but that happens inside of a week or two. So what? It goes down to 24. Before you know it, the thing has actually cruised all the way back up to $30. What are you? I'm out. I'm out of the contest. Reward, okay, $1. That's it. All I need you to understand at this point in time, okay, is that this strategy gives you the duration you need. And we don't have to do this strategy for 1 month. You could do the strategy for 3 months. You could do the strategy for 4 months. And I can tell you right now, if you set the trade up right, you do not have to pay more because you're doing it for 4 months. You don't have to pay more because this is options, right? You understand options. People go, the further out you go in time, the more it's going to cost. Yeah, not when you're buying one option, selling another option. Okay. Again, the stock could go down and you don't necessarily have to be right picking direction. Okay. Yes, it works. And yes, risk a buck to be able to make a buck. And, somebody actually asked a moment ago, they go, what's the probability in here? I'll just give you a quick heads up. So if you go out there and risk, okay, 1, all right, to be able to make 1. So the risk is here, the profitability is here. What's the profitability? In most cases, okay, it can actually run between 62% on up to about 73%. It depends on the actual, setup of the strategy, which is exactly what I'm going to detail into this in a moment. Okay, that's the Bank of America. Okay, listen, this is why you want to use these spreads. I mean, do you realize the amount of risk out there in the marketplace right now? Most people don't care. Right now, when I say, do you realize the risk in the marketplace? They're like, nah, there's no risk. We just go up. Don't worry about it, Don. We just go up. I mean, there was actually, there was an article I read today. There was some guy that was so arrogant as a day trader that he was actually making fun of Warren Buffett for having sold the airlines back in March and April. Okay, this guy was actually a day trader. He's been involved in the business maybe a year, and he was making fun of Warren Buffett, who's obviously, one of the richest people on the planet, for selling out of the airlines which are likely going bankrupt. But he's like, that moron, he could have made so much more money. I'm telling you right now, okay, you want to survive? If you want to survive, listen, okay, you have got to encompass this. You got to overcome the high probability of being stopped out. In-out spreads, don't use a stop order. Number 2, we defined precisely, okay, the risk and precisely the capital exposure. I never needed to buy or sell the stock. Did you see me buy or sell the stock? No, I just traded the options. And I'm providing you a high probability of success. You can initially be wrong in terms of price movement and still come out ahead. And I'm telling you, you need this in your life more than you will ever know. You need this in your life. And it's one of the hardest things to tell that to people. Well, it doesn't matter, Don. Everything goes up. Okay? It doesn't matter. You want to make more money when the market goes up than you can currently? Use these spreads. By the way, the Bank of America, here, listen, this is just some fictitious trade. Look, this is $2.15. This is $1.15. It's $1 debit. This isn't a fictitious trade. This is real. As I said, this is a strategy that, people are like, I could put that on tomorrow. Of course you could. First of all, once again, we are taking you to a screenshot. The screenshot is of Thinkorswim. Okay. On this particular screenshot, first of all, there's the stock price. I said it was 28, but it was really 28.05. Don't tell anybody. Okay. Look at the price of the 27 calls. By the way, everything on this side of the screen over here on the left side of the screen is calls. They're trading for basically 213. I know in the example I said they were 215, but they're 213. Okay. And then, okay, the calls that I'm selling, which is the 29 calls, are $1.12. Net, what does the strategy cost? Okay. Right around $1. That's it. That's the max risk. All I wanted to do was show you a screenshot, and people go, what's the probability? Oh, come on. You asked me a moment ago in the chat room, like, what's the probability? You could look right here. The probability of touching. Okay. Probability of touching. Listen, you don't need the stock to go that far. You're not asking for a miracle here. You don't need the stock to go to 30. You need the stock to go to 29. A little above 29 to see the light of day of this particular strategy. I don't think that's asking for a miracle at all. I think there's a really good probability. How good of a probability? About 79% probability, okay, of touching or exceeding the 29 level. But frankly, to make decent money on this trade, okay, maybe you need us up here. And there's about almost a 70% probability of getting to 29.50. And I stress to you, okay, the risk in the trade. What's the risk in the trade? Let's actually detail that for just a second, because I can't overemphasize this, right? You go out and you do this strategy and you have literally $1. Now, $1, options trading contracts. So one contract, you would have $100 of risk. That's it, $100 of risk. If you did 2 contracts, you'll have $200 of risk. 3 contracts, $300 of risk. That's it. I said, you could fine tune this to anything you want. People go, I had no idea that I could even trade in this business for $100 at risk. $100 at risk. You don't even have to do a $2 wide spread. You could do a $1 wide spread. If you did a $1 wide spread, okay, you'd only have $50 at risk. You want to do this with $50 at risk? What about commissions? What about commissions? They're 65 cents a contract right now. Man, you're living in utopia. When I started trading in this business, okay, it used to be when I first started trading on the floor, it was like $10 for a trade, okay, plus $1.50 a contract, plus $1.50 a contract. It was ridiculous. Couldn't make money. Now, okay, now you're talking like, hey, who cares about commissions? Commissions are an afterthought. You pay $1 for this. What are commissions? About $1, maybe $1.30. Okay, $1.30 in commissions on a $100 trade. Again, you're living in utopia. You got to learn, okay, to strategize in here. And I stressed you, the trade that I did is for 31 days, but I could go out 3 months. I could go out 4 months. All right. This is the kind of stuff that you need to learn in here. And I also want to detail this. People that are day trading, okay, if you want to trade in and out of this in a day, you can do that as well. I'm just showing you something that's more hands-off because I think that that's more applicable to a wider array of people that are coming. There's a lot of you guys that are just like, hey, I just want to put something on and just leave me the heck alone. And I get that. Okay. But I also need you to know that you can do this day to day. You're in, you're out, you're on with your life. You're in, you're out, you're on with your life. But you could also put it on for 30 days, for 60 days, for 90 days. Maybe you admit that you're like, I don't know what's going to happen in the future. So do it a little further out in time. Listen, in-out spreads give you the power to trade massive stocks and index products, pennies at risk, literally pennies at risk. Now, you knew this was coming up because I didn't want to ruin it earlier, but this is Amazon. Now, Amazon, okay? Instead of doing a bullish position, tonight you've actually seen what? Okay, bullish positions. I'm bullish, I'm bullish, I'm bullish, I'm bullish, I'm bullish. This is not bullish. This one is what? Be the bear you always wanted to be. This one's bearish. This one's not done with calls. This one's actually done with puts. You go, what? Amazon is a $2,615 behemoth. I took the screenshot middle of the day. I know it moved a little bit, okay? But this is your bearish shot. And this particular strategy, all I'm basically doing is, I'm buying this put, selling this put, buying this put, selling this put. The entire max risk, $5. If you did one contract, it's $500. Let me ask you something. You could go out and you could buy one share. People do this all the time. I bought one share and I had $2,615 of risk. Okay. Obviously, you don't have that much risk, but even with one share of Amazon, would you agree with me that you probably have, even for a day, would you agree with me that you probably have plus or minus $200 risk? Okay. That's for holding it for a day. Amazon moved $100 today, right there. You can actually see it in the backdrop over there. Amazon literally moved what? $100 today. In the next 23 days, Amazon's probably going to move at least $200. It's insane how much this thing can move. Why not control your risk? Okay. That was one share. You're controlling the equivalency of 100 shares, $500 risk. You can't lose in this strategy more than $500. And people look and they go, why are you being bearish in Amazon? That's a great question. How about because the auto expected move? What happened in Amazon today, okay, is critical. Amazon, for those of you that speak geek, was trading in a relatively tight range. Amazon actually cracked the upside of the range. It's actually the first day that it's broken through the expected move in quite some time. This is a statistical aberration. Amazon could continue to run up, but there's a very, very high probability in just the next couple of days, okay, that Amazon comes off. Probably the entire marketplace as well, because the marketplace is threatening the upside in a big way. So when you ask why short Amazon, the auto expected move provided a wonderful, wonderful setup for this. And I can show you strategy after strategy. I am telling you, okay, you have got to learn this stuff. People will look at like technical analysis and they'll tell you this is a huge extension. The RSI is too high. You could come up with 1,000 different reasons technically why you want to get short. But this is a quantitative measure. This actually says Amazon did something statistically that it shouldn't have. And that's why these expected moves, okay, and I'll show you, like, look at this. This is actually a huge hyperextension and then the big pullback. All you needed was a little bit of a pullback. That's it. You needed a little bit of a pullback to make what? I'm not asking Amazon to sell off big. Let me clarify this for a second. You think I don't need Amazon to sell off big. I just need to sell off, okay? If it sold off like $30, $40, gold, Jerry, gold. That's all you need, okay? You need, again, not a huge down move. You need that, like this kind of a pullback. That's it. That kind of a pullback. This kind of a pullback. It's enough. Volatility equals profitability in this business. Now I'm actually going to show you a couple of my trades. So in out spreads, okay, go out, risk a buck to be able to make a buck, but a high probability of making that dollar. Let's look at this in real terms though. And I'll tell you what, I'm going to start with trades back in the March timeframe, and I'm going to move forward. So we're going to go to March and April, May, June. Okay. I think I may have actually even taken off some trades in June already. I mean, June, we're early on. We're on, June 9th here. So we're a little early on, but I've taken off some trades. So I want to show you though, these are real trades. These are live trades. These are my trades. Here we go. Let's dig into this a little bit right here. Okay. This is actually entering a position. Again, I'm showing you this from a little bit earlier. In fact, this works out great. Okay. This is March 19th, exiting on March 20th. I was literally in this trade in Microsoft for a whopping 1 day. In 1 day, we actually made some 43%. Now, every $211 I invested, I got back 301, right? 211 debit, 301 credit. We have some very, very specific rules though around these particular in-out spreads. Why did I exit it? Why did I get out there? Okay, all of it. Now I want you to remember, you didn't have to do $211. Okay, I want to show this to somebody because you may have a $2,000 account. You may be brand new. You have a $2,000 account. That's your entire IRA. You can do this in an IRA. You can do this with $2,000. But if you don't want to do it, okay, for $211, and I'm saying you have to have a $2,000 account, but you only have to risk $200. but you could do this $2,110. That would actually return you, okay, $3,010. So you could do that. You could just add more contracts to the particular strategy. By the way, as I was saying, okay, our clients here at TheoTrade trade with us. All right. Some of them do better than I do. I mean, out of the Microsoft, contracts, 100%. This is actually bought at 93 cents, sold at $1.64. Out at Microsoft, 274. Okay. You'll notice there's different pricing in here. Listen, this is a live marketplace. People are going to do what people are going to do. Some people are going to hold the strategies longer. Some people are going to hold it less time. Okay. Another great trade. This is from Ray. Another great trade. Microsoft spread. Thanks. Okay. Here. Hi, Don. I should, with you, Microsoft this morning, I got out 200% profit. Thanks. Okay. Again, everybody's free to kind of do what they want to do in terms of getting out, but we have very definitive criteria. But in a live market condition, if things are moving around a lot, obviously they're going to get different prices. The next trade, this is Boeing. And again, I want to show you a little bit of, the lifespan of a trader. So I did a trade in Microsoft. Okay. Here's one in Boeing. I entered into the Boeing trade. Again, I entered into the Boeing trade here, March 25th. I exited April 2nd. Okay. Every $238 I invested, I got back $362. It was a 52% return. Okay. Remember, this could be $2,380. But Boeing, everybody knows Boeing has it's literally been Mr. Toad's wild ride. And the reason that I really wanted to show you a Boeing trade and in a very short time frame is simply in respect the fact that Boeing has been so wild. Do you realize how much money you could lose if you did not use the proper spread? You go out there, you buy the stock. If you got on the wrong side of the stock, okay, this is a disaster. By the way, this is some of our clients here. Closed Boeing at 357. And here, look, my fill was at 362. I filled it at 362. This guy over here, Alex, 357. Mary actually filled for 363. I wanted to show you that because apparently she penny bettered me, right? This is Jurg, filled 30% profit. Okay, Mark 55%. Okay, this is Mariano out Boeing 364, Boeing 357. They beat me. Trader Vic, wow, closed my position for a $30,000 profit. Okay, Trader Vic, she trades. Okay, she trades. I actually know Trader Vic quite well, and she trades big size. Onward and upward here. Visa. Okay, the next trade I had on was Visa. The reason I'm showing you Visa, again, I'm just moving forward in time. This one is March 30th to April 1st. Very, very short time frame. As I said, you could hold these things for days. You could hold them, okay, for months. This is a trade that I did for mid-April, and I did it towards the end of March. I did it for the end of March. Towards the end of March, it was for mid-April, but it actually hit pay dirt. Okay, 42% return, literally in what? In the midst of, a couple of hours, pretty much in this trade. Every $107 I invested, I got back 152. Again, a 42% return. Moving on, the next one, Intel. In terms of Intel, what did I do on Intel? Entered in April 7th, got out April 8th. Every $86 I invested, I got back 111. I wanted to show you the Intel trade because I don't want you to think that you have to have huge investments. One contract, okay, one contract, that's it, people. Who cares? You got $86 invested. If you did 10 contracts, you'd have $860 invested. Turn, okay, basically $1,100. Okay, that is, again, a one-day trade. As I said, a few hours. All right, so I have tendency, again, to show you a trade here that I put on April 7th. It was just for the 17th. The trade was only going to have a time horizon of about 3 weeks. It made money in a day. The next one, the XLE. The XLE. What's the XLE? It's the energy sector. Here's, again, a 24-hour turnaround. Why so many 24-hour turnarounds? This was not by intention. I want to show you something here. I put the trade on April 14th. This thing was good until May 15th. It had over a month. But you know what? In a 24-hour period, it made what it needed to make. 38% return. Every $87 I invested, I got back 120. Okay? Onward and upward. By the way, I took a lot of people with me in this particular trade. Jeff, this XLE was my first option trade in out, and it filled. I'm officially 100% win rate. I love that one. Okay, first time he ever stepped into the marketplace, boom, he hits pay dirt. Marshall, okay, thanking us, nice trade over here. I closed, my first one lot, $1.14. I closed XLE in out spread for a 30% gain. Okay, so this is just all of them basically talking about this particular trade. Here's person $1.15. There's $1.14. Okay, you can see I got filled right around $1.20 credit. All right, next one on the docket here. This is a QQQ in out spread. And this one I opened on, and again, I'm just showing you This one was all the way out to May 22nd. Okay, I got in on April 17th. It closed on April 21st. Now, time out. What I wanted to detail in this particular trade, I put it on for $80. I got back 108, 35% return. I don't want you to think for a second that I had to sit here and like, is it there yet? Is it there yet? Is it there yet? Is it there yet? It's not. You can actually use what's called a GTC order, good till canceled. This particular trade, okay, I used a good till canceled order on. I didn't sit there all day and try to, wiggle in and wiggle out of it. I opened it on April 17th. I had the intention of holding it all the way to, towards the end of May, but it filled literally, 3-4 days later. Okay, out of my second QQQ for 30%, Paul said, made good money in the QQQ trade. Thanks, Don. Greg, 30% of the QQQ. Mark S, closed QQQ for $1.09. YRB, tried really hard to get $1.06, but the market forced me to get $1.08. So now we're up to the April time frame. Okay, this is another April trade. By the way, this April trade, this one took a little bit longer. So here's one I opened on April 7th. It didn't fill and close until May 7th. This is what I talk about with duration. Every $87 I invest, I got back 134. It's a 54% return. So now we're into like the May time frame. We're just moving forward. And again, I just want to show you a smattering of trades. This isn't every single trade we have on. It's a smattering of trades. The XLP. What is the XLP? It's consumer discretionary. Next one on the docket, Baidu. Okay. In terms of Baidu, here's one I opened June 4th, closed June 5th. Every $213 I invested, I got back $282, right? 213, exiting for 282. It's a 30% return. It's a 30% return, okay, in less than a 24-hour period of time. Again, the intention of this trade was not to close it in 24 hours. The intention of the trade, look at the time. That was all the way out to July 10th. I had over a month, but the trade actually hit pay dirt in a very short period of time. And again, here's another one, okay? Out of Baidu, 285 for 2 contracts. Excellent. Okay. And again, these, Justin over here, thanks. 33% in one day. Gotta love it. Closed Baidu at 287. Out of Baidu at 282. Great trade. Out of the contest, Baidu, 35%. So just a couple of comments in here of some individuals, of course, that are following through, again, on a couple of different trades that we have. And you can see this is June 5th. Most people are commenting on the trades on June 5th here. Okay, this is actually a GM in-out spread. And again, I'm trying to bring you as close to this date as possible. I'm trying to give you like a little bit of history of some trades over here. This is GM. This is a GM in-out spread. This one was actually opened on May 27th and closed, well, yesterday. Okay, and it was nothing more than a dollar wide spread. And the reason I wanted to bring you this one, I think this is one, it's kind of cool because it's $51. Okay, literally, it has $51 at risk. That's it, $51 at risk. What can you possibly lose? Oh, I can lose $51, but you could have done this thing for $510, okay, to be able to make $970. It's a 90% return, in, again, this one, we let it ferment a little bit more, okay? But this trade could have been good till June 12th. We closed it on, what, June 8th, okay? That is in-out spreads. Some bullish, some bearish. Get used to it, people. This is what you want to do. Again, to define your risk. Do the Baidu spread. Do the XLP spread. Okay. Do the QQQ spread. All right. Do the GM spread. Again, tailor your risk to anything you want. Listen, what better time? You got to learn a skill set. I'm telling you, to last a lifetime. And the other thing is, I'm pointing out to people, when will you ever have time like this again? Most people right now are working from home. If you're still working, from home, okay, you could do this very part-time, but if you're still working, obviously you could do it part-time. If you want to make this full-time, do it full-time. Get in, get out in the exact same day if you want. If you're quarantined, I think it's a great way to emerge stronger and in great financial shape. Again, what our members are saying about this, and just a few members, this is 165 points in the NQ. This is somebody that trades intraday. This is like a day trader. This is Jesse. I just cleared $1,500 in 2 days off of BBBY. All right, it's Bed Bath & Beyond. Thanks for your tips. This is Mino. I made 60% on Boeing call spreads, right? That's an in-out spread. I placed 2 spreads this week and I'm already out. Again, these are all, just wanted to show you, okay? This is June 5th, June 5th. Again, very, very recent because I don't care what happened, a week ago. I want you to see what people are doing literally in the last couple of days. Mino, 60%. John Haggerty, okay, just sold my remaining APA calls, bought March, up 23% today. I'll take, it's actually a 670% return on some calls over there. And again, this does not need to be full time. If you don't have the huge time, it's not a huge problem. Okay. Every single trade shown today was displayed live at TheoTrade. That's why I showed you a couple of the clientele and their comments, because I want you to realize that I'm not just sitting here, behind closed doors and he's hiding and trading. Okay. Listen, we're trading in front of thousands and thousands of individuals. And the trade results, and we even text out trades to people. The trade results were showing it's perfect for part-timers, especially the in-out spread. In-out spreads, it's hands-off. And it uses set and forget order types. That's why I was talking about GTC order types. Even a fraction of time is enough to see some results. So if you want to do this part-time, or if you want to be glued to the computer, that's fine. But it can be hands-off. And I always reiterate that because, yes, there's some learning curve into this. And I know, nobody ever wants to learn anything, but spend the time. Listen, a couple characteristics of this particular trade. And you got to remember this, the characteristics, the attributes of this are undeniable. You never have to buy the stock. You define your risk. Risk is limited to precisely your comfort level. Remember, like $100, I could do a trade for $200. I like that GM trade. It was $51 at risk. That was it. Okay. You don't need to use a stop order. We don't need no stinking stop order. You can vary time frames. You could do this for a month, or you could do it for 3 months. You could do it for 6 months out. The probability of profit's high. It's also a perfect spread to reduce risk of a stock portfolio. How can you reduce risk? First of all, you could actually clean up some of your stock and get rid of it and use spreads in lieu of stock. Use spreads instead of stock, because in a marketplace how many of you right now, and I think this is a fair question, how many of you right now are thinking to yourselves, I have a portfolio? You got to be nervous with your portfolio. You got to be nervous with your portfolio. If you're not nervous with your portfolio right now, okay, I just have to tell you, we should make you nervous with your portfolio because you have huge risk. You should be nervous with your portfolio. You have got to reduce risk right now. Use the spreads to reduce risk. It's an excellent tool also. If you're seeking to build returns from a smaller account, that's okay. The in-out spread, you have a $2,000 account. You can get in and you can trade stuff for $50, for $100, okay? But at the exact same time, you'll see me, I trade. I keep just over $1 million in 2 different accounts. And I can trade these strategies with a few $1 million in the account. So I don't care whether you have $2,000 in the account or $2 million in the account. That's fine. Okay. The other aspect of this is you got to build the trade. And I don't want options to intimidate you. No matter how long I've gone out, I've actually been on the education side of this business, and I traded for 22 years. But I've been out educating. When I was educating for Thinkorswim and TD Ameritrade, a lot of people, they just let options intimidate them. And you shouldn't. Okay. Is there a learning curve? Yeah. It's a couple of terms, couple of definitions you're off and running. Listen, the spread below is being done for a dollar debit. That's it. But you got to understand that a spread is the same thing as using a power saw. If you're going to build a house, you're going to use a power saw. Why? Because it's going to be what? You use a power saw to build a house. It's going to be quicker, faster, safer. It's going to be the easiest way to actually cut, umpteen 2x4s or 2x6s to be able to build a house. Right? An option spreads are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the marketplace. You don't use them right, though. Just like a saw, you're going to lop off a couple of fingers. Okay? Learn to use these in-out spreads. Listen, you can do in-out spreads. Maybe you have no options experience or limited experience. Okay? Don't let that part, again, intimidate you. You need these strategies for the foreseeable market future. We can show you how, we can show you when to place in-out spreads. It does take a couple of hours. Again, there's not this huge learning curve. A few terms, a few definitions, you're off and running. But we can show you how and when to place them. What we do here at TheoTrade, we create detailed recipes for every strategy, including in-out spreads. And when I talk about detailed recipes, it's like baking a cake. If you're going to bake a cake, all right, some people in here could probably say, yeah, I could probably bake a cake. Right? No problem. You could bake a cake. But the first time you ever baked a cake, did you need a recipe? Most likely the answer is yes. People don't just wake up and be like, I think I could bake a cake. I got to be honest, I probably couldn't do it. You give me a recipe, slam dunk, no problem. Could definitely bake a cake. Trading has got to be the exact same way. If you go in there, all right, what recipe are you following right now to be able to trade? I'm not asking that rhetorically. I'm not asking that to, for you to or me to be facetious in any way. What is your recipe right now for trading? Okay, because in the history of my time at both Thinkorswim and TD Ameritrade, 7 million clients. Most people, they don't have one. They just do whatever they're going to do. Why'd you buy the stock? Because I thought it was going to go up. Why'd you buy the stock? Because the guy on CNBC made a better argument for the up than the guy that thought the stock was going to go down. And you're like, oh my gosh, really? Okay, listen, you need a recipe. Okay, you need a checklist. You need something like, you get into the cockpit of a 747. Nobody just puts the key in the ignition and takes off. They go through checklists, detailed checklists. And then once they get into the trade or into the plane, okay, they actually have checklists if anything goes wrong. You need that, right? Listen, this is what you need to successfully enter and exit in-out spreads. First, what makes a viable in-out spread candidate? And again, I don't ask that rhetorically. What makes a viable candidate? You saw some of the trades, and that's why I wanted to take you through some of my trades. I'm showing you a Microsoft trade, and I'm showing you a Boeing trade, and I'm showing you an Amazon trade, and I'm showing you, Apple trades in here. What makes a viable candidate? Okay. Well, I'm going to give you a little bit of a hint in here. What makes a viable candidate? What volatility should I seek out? If the volatility is too high, you're dead. People immediately go, I think Tesla might be a good candidate. Really? I don't know. It's kind of a volatile stock, right? You have a madman at the helm, but it's all right. You need to know the precise volatility because that's what's going to help select the candidate. And that can vary from time to time. What options expiration do I select? When I ask that, should I do it for a month? Should I do it for 3 months? Should I do it for 6 months? Okay, we can tell you definitively which options expiration. What should be the delta of the option I buy? More appropriately, some people are like, excuse me, sir, I don't even know what a delta is. A delta, okay? We're actually going to tell you precisely which option to buy, okay? And the irony is we'll tell you exactly which options to sell against the option you buy. We can tell you how to build a trade. Some people can figure that out. How do I build a trade? I could read a book about that, yeah? What's the right amount of risk for me? If you have a $2,000 account, we can actually tell you precisely the allocation amount. That ain't no joke. It'll tell you the exact allocation amount. No, there's no room for error. You screw up your allocation, you're dead. You cannot over-allocate. You can't under-allocate. You got to be spot on. You want to grow an account? Okay, how much capital you put forth at risk is critical. Let me show you what we do here at TheoTrade. TheoTrade builds recipes in trading. Okay, literally checklists, detailed checklists. Every single step you're going to need to be able to get into this stuff, to get out of the stuff. A moment ago, I was talking about a pilot, and a pilot gets into, again, a cockpit. They don't just turn the key and take off. They go through highly detailed trading checklists, okay? And literally, it looks exactly like as if you were going to, whether you're a pilot, whether you're a trader, the checklist would look almost identical, okay? In fact, when we put together the criteria here, we put it together in a checklist format precisely like a pilot would see. And it's not just about getting you into a trade. I mean, trading, it's also about answering the what ifs. So first you got to go, what might be a good stock or ETF for in and out spread? What's the correct options expiration for my in and out spread? How much capital do I commit? What strike price options do I buy and sell and how many? In growing a small account, what should my allocation be? TheoTrade has the answers. So we build these recipes, definitive criteria, checklists for each strategy, each unique variable. What are the unique variables? I don't know. Well, what if the stock goes up? What if the stock goes down? Okay, what if a dividend is coming? What if expiration is coming? What can happen to you in a position? We actually build like a little flow chart. The checklist says, if this happens, this is where you go. If this happens, this is where you go. Listen, TheoTrade is the answer to your questions. What's the right probability for my trade? Somebody asked that already. How many option contracts do I do for my account side? When do I close my spread? What if the stock sells off big? What's the correct return for the strategy? What if the stock rallies massively? Can I fix a losing trade? Come on, people. This is how. This is when. This is why. It's at what price? I'm going to tell you right now, that's just the beginning. That's just the beginning of the many variables you're going to face while buying an in-out spread. Okay? Listen, I recognize you can read what a spread is. Right now, go Google. Yeah, you're like, I'm on Google. You can Google. There'll be 10,000 pages what a spread is. Maybe some of you even know how to build a spread. Right now, you already know how to build a spread. You looked at what I just did and you're like, I got it, baby, I got it. Yeah, but you need TheoTrade's recipe for success. This is not about strategy. This is about recipe. And I'm going to say that again and again and again and again. This is not about strategy, okay? I mean, literally, Anybody can learn strategy like, I figured out a spread. I mean, there's a bunch of different option strategies. There's iron condors, and there's spreads, and there's back ratios. Forget all of it. Wipe the slate clean. Because strategy doesn't make you money. Recipe for success makes you money. Our recipe is 20 plus years of trading experience. That's me. Access to client order flow for 15 of those years. I've literally viewed and studied millions of trading accounts. I mean, I ran education at a firm for 15 years, had the largest options order flow in the entire industry. Bar none, by the way. We had the largest options order flow in the entire industry at Thinkorswim and TD Ameritrade. That's where most of these recipes come from. Criteria is a recipe for success. Listen, the following strategy and the corresponding criteria requires the utmost attention to detail. And we spent years of all the trades, of all the setups, the in-out spread, spent years fine-tuning this trade setup and criteria. When you approach the section on criteria, you follow steps to be able to build a trade. You follow the flow chart. You follow the checklist. The guide to small account growth with in-out spreads. We have a 4-hour course. It is available immediately, okay, on growing a small account using in-out spreads. Now, the class, that's 4 hours. Again, we put it together, and it's ready to go. You can stream it literally tonight. And I'll explain why here in just a moment, okay? First of all, we wanted to have this class ready because we realized that the timing of the in-out spreads, we think that this is absolutely critical. The class slide deck, though, that has the checklist, the criteria, okay, it's available immediately for download. So you can go in here tonight, you can actually stream this. And the course is archived. When I say it's archived, it's available 24/7, right? So you can stream this in the middle of the night, that's fine. But we also have at TheoTrade our own iOS and Android application. We literally have our own applications so that you can download this, okay? Play it. If you run an aircraft, you could play it while you're at 30,000 feet. Nobody's flying around right now, but you guys get it. You do not even have to be internet connected when you're playing back the class, okay? We think that that's a critical aspect in being able to obviously view the class. The class this evening, it's $497. And again, I think you're going to be absolutely blown away by what we offer in a 4-hour class. The class is going to include, and I'm actually going to go through in just a moment. So hang with me here for a second because I'm going to go through what we teach in this class. But before I go any further tonight, I want to hit upon a very key point. And I'd like to hit this point early on, okay? I fully recognize that many of you attending this evening have been through a bunch of different classes, not necessarily here, anywhere, okay? Listen, I've been in this industry for 22 years. I've been out there educating since about 2001. I've seen it all. I've done it all. I've heard it all. Okay. I have a question for you. How many of you have actually been to other classes, other educational firms? Because I'm just going to lay it on the line right now. There's a million different education firms out there. Okay. People look at this and it's $497 for another class. This is not another class. Okay. Because I'm going to tell you right now, it's not just another class. You stick with me for the next 10 minutes, and I'm actually going to add some bonuses to this class because here at TheoTrade, and I'm already going to foreshadow, we totally get it. We don't ever just give you a class and go, okay, you took a class for $500 and we give you a little pat on the tushy and go, you go out into the market, into the big boy place. You got to be insane. Okay. Our classes include everything. We include all the background knowledge, everything. All right. We will ramp you up for this class. After we ramp you up for this class, we will maintain and give you new classes. Okay. With that, we will give you access to all of our archives. And we'll text and email out trades to you. And I'm actually going to detail this here momentarily. Oh, did I also mention we're going to provide you email support as well? Okay, you can email me and say, hey, Don, is this a good spread? And I'm getting to this right here, right now, because, people want to know, what do I get for $497? So I'm going to talk about that momentarily. But you need to know right now, TheoTrade, it's not about one class. Okay, we have literally built archives. There are 5 years of archives, okay? Every variable of every type of trade you could ever dream of is covered here. And that's what TheoTrade's about. The in-out spread is critical. You need this. And I'm telling you, you need it in your life right here, right now. This 4-hour class is going to change the way that you trade in this business, period. Some of the other material I'm talking about, you need that to support yourself. You need that to, maybe you've never traded an option. Don't think, again, we're just going to give a little pat on the tushy and shove you out into the big boy marketplace. Market is scary as hell right now. You need somebody to hold your hand, and that's exactly what we're going to do. Okay? Tonight, we're going to offer a couple of bonuses. Before I offer you those bonuses, I want you to realize here's the curriculum. Okay, the key points, the curriculum. Like, what are we going to teach in the in-out spread class? Because you're coming here to TheoTrade for the in-out spread class. And I'm telling you, for $497, okay, you do one successful trade. Okay, it's going to save you more than $497. Because I'll tell you what, and people go, how's that? How am I going to save more than $497? You go out and trade Apple and you're wrong one day with stock. You don't think you're going to lose more than $497? You're going to lose a couple $1,000s even thinking about Apple right now. You're going to lose a couple $1,000s. You know, people are like, I like Tesla. Tesla's like a bad habit. Okay. Guess what? Trade Tesla with in-out spreads. You need to learn this stuff. Listen, the first thing we're going to do in this small account in-out spreads course, you're going to learn to construct in-out spreads. Easy to learn, easy to place. Number 2, okay, how to buy long duration options without actually paying more. Number 3, how to use defined risk-reward strategies so you never have to lose sleep over your positions again. You're going to fine-tune your portfolio to exactly the risk that you want. Number 4, in-out spreads can be used in any market condition or direction. But I'm going to tell you right now, volatility, they love volatility. Number 5, build your own in-out spread. So you just, you're going to learn to construct it. You got to learn structure, but then you're going to learn to build your own spread with the step-by-step entry and exit criteria. Okay, that's what this class is really about. It's about criteria. Number 6, in-out spreads easily managed with set and forget. This is what we term GTC. That's good till canceled order types. Number 7, in-out spreads can be done in a trading account, $2,000. If you have $2,000 in your account, you can trade spreads. Okay, trades can be done in retirement accounts with minimal options experience. By the way, people always go, I am not approved for options. We'll get you approved for options. Come on, I worked at the biggest brokerage firm, okay, for what? You know, from 2009 to 2015. Got a couple of connections there. I have connections at E-Trade. I have connections at all the major brokerage firms. We will get you approved for options. Number 9, capital allocation. We're actually going to teach you position sizing. Techniques to grow your account. Obviously, number 10, we're going to talk about the recipe in this class and how to build the correct trade using that recipe. Now, as I said a moment ago, and I kind of alluded to, this is why you're taking this, right? You're coming here to TheoTrade to learn the in-out spread. We're not going to stop there. As I said, we got a couple of bonuses. Like, we get this. TheoTrade goes beyond one class or one indicator. You know, as I said, I was in this business since 2001 on the education side of it. So I started trading in 98. I was invited to Thinkorswim in 2001. I started looking around at other education firms, and I noticed a trend. An education firm charges you for a class. Then what do? Then they charge you for an indicator. And then they charge you for a class to learn how to use their indicator. And then they charge you for a chat room so that you can use their indicator from the class. And it just keeps going. And before you know it, okay, you're $15,000 deep into this. You know, when TD Ameritrade first acquired Thinkorswim, there was an education component of TD Ameritrade. And these guys used to charge, and I'll talk about this later again, they used to charge $24,000 for an 18-month long class at TD Ameritrade. The first thing I did was like, this is ridiculous. Who wants to pay $25,000 to learn this? Listen, we get this business. You want everything to trade and invest. You want it at one place and you want it at one price. And when I left TD Ameritrade, okay, we left for a reason. First of all, we wanted to get away from regulation because the Securities Exchange Commission, the Dodd-Frank bill, forgive me for saying this, but regulation sucks in the financial industry. I hope you're not offended by that because it does. It's one of the reasons I left. It is the primary reason that I left TD Ameritrade. I left so that I could actually come out into the wild here and actually teach what people should know, but not to charge them $25,000. It's ridiculous. The first bonus we're going to give you tonight, we're going to give you access to over 92 trading classes. It's our entire library of everything that we've done here at TheoTrade. I'm just telling you right off the bat. Hey, listen, that's the first bonus. Everything that we've ever done here at TheoTrade in terms of classes is available to you. It's 92 classes. And it's not just me. Listen, the first class, you need to watch this. It's the small account. It's the in-out spreads class. It's archived. It's available immediately. Like, get it? It's available immediately. Here's some of the other classes. Guide to Surviving and Thriving in Extreme Volatility. That's a class I did just about 6 weeks ago. Volatility backspreads. Backspreads. Smash hit. That's the trades that I started with tonight. IWM, EEM, and the XLF. Those are volatility backspreads. Okay? Growing a small account with black book spreads. How to collect income being short. The next big short. This is the risk to a spread. The risk to a spread, probably one of the most influential classes, okay, that I've probably done here at TheoTrade. The guide to selling high probability spreads. Iron Condor, selling premium, minimizing your risk, day trading. Okay, there's actually day trading NASDAQ futures class. Covered calls. Essential skills for consistency. Top 10 skills for growing a small account. Pairs trading. Every one of these classes is available to you tonight, now. It's literally access to over $9,000 plus in classes alone. And immediately when I throw this out here and I'm like, okay, so it's $497. And at $497, we give you access to everything. Immediately people balk and they're like, whoa, is that an introductory? Not an introductory. There's no introductory prices here. We don't do that stuff. Okay. This is not a membership either. I'm going to tell you right now, we don't do memberships for $497. Forget memberships. Okay. We don't need no stinking membership. We don't need you hooked. Okay. You're going to get everything from day one that you're ever going to need to trade here. It's 92 classes. Okay. Why do we do it? Because it's the right thing to do. Because if you really want to learn this business, okay, you want to learn this business, you watch a couple of our classes. And every one of these classes has its own criteria. By the way, I didn't do all 92 classes. I didn't mention this earlier, but now I am. Okay, we stacked the deck here at TheoTrade. In terms of our instructors, bar none, have far and away the most experienced crew in the entire instruction industry, bar none. Again, people are like, well, there's this guy. Really? Okay, because we have 7 full-time people, including myself. First on the list, Jeff Bierman. By the way, Jeff Bierman is also Professor Bierman because he's a professor of finance at Loyola in Chicago. So Jeff actually moonlights with us here at TheoTrade. He's an analyst, trader. He's also the chief technician for TD Ameritrade. He was the chief market technician for TD Ameritrade until 2015. Guess what? When I left TD Ameritrade, who do you think I took with me? One of the first guys, Jeff Bierman. He's out. Okay, I think everybody in here, if you've ever been on the Thinkorswim charts, okay, you owe Jeff a big thank you, because he actually built over half the studies in the Thinkorswim charts. Next, Matt Williamson. Matt is our premium selling strategist. He's a market neutral guy. That means he's an individual that goes out and sells options premium. That's what he does for a living. Next on the list, Corey Rosenblum. He's our senior strategist and resident swing trader. Corey actually talks extensively, okay, of entry and exit of swing trades. And these are all trades that you can obviously follow. In fact, Corey even produces a report for us, okay, called Corey's Corner. Again, we give you access to that. Next on the list, Brandon Chapman. Brandon's CMT, Macroeconomics, Technicals, and Fundamentals. Now, a couple of moments ago, I was telling you about some $24,000 course. There's a $24,000 course, and a lot of people know exactly what I'm talking about. It's a $24,000 course, and it was spanning 18 months. You know why I know so much about that course? Because Brandon Chapman's the guy that actually wrote the book, okay, at TD Ameritrade for the $24,000 course. You know what the irony is? So Brandon Chapman, who again also worked with us at TD Ameritrade, is now here at TheoTrade, and what we do for even the $497, okay, absolutely blows away what we used to do for $24,000. Okay, next on the list, Steve, that's Slim Miller, 43-year veteran, stock options and futures trader. Okay, Slim literally started trading on the floor before I was born. Last but not least, Tony Rago. This is an intraday trading strategist. Tony, what does he do? All day long, sits in our chat room and actually calls out NASDAQ futures setups. Okay? You want to be in, you want to be out, you want to be fully engulfed in the marketplace, he's your guy. And again, I want to reiterate something here. Each one of these instructors of those 92 classes, okay? You want to learn about intraday trade? There's a ton of classes on NASDAQ futures. You want to learn about what Steve, Miller did for his career? He's got courses in there. Brandon Chapman, courses in there. Jeff Bierman, technical analysis, unbelievable courses. It goes on and on and on and on, right? That's the first bonus. And again, I think that first bonus is well worth over $9,000. Okay, and we're looking at like what? Each one of these classes would be $497 for this and $497 for this. Okay, easily worth over 9 grand. Next, bonus number 2. Bonus number 2 on the list over here, we give you all access TheoTrade VIP membership. Okay, it's included. What is it included? We have to give you 3 months access. Okay, because you're thinking about that, you're like 92 classes. Yeah, we're going to give you 3-month unlimited access to TheoStream. TheoStream, though, is not just about classes. We're going to give you access to our live trading chat room. We broadcast approximately 6 hours per day. Now, I realize that not everybody can watch 6 hours a day, but if you can, it's like a little bit of an added bonus, right? And at this point, you're like, oh my gosh, you're talking about 92 what? 92, classes. You're talking about 6 hours a day. You're like, this is overwhelming. I don't know, for $497. $497. Would you rather be overwhelmed or underwhelmed? So we have a live trading chat room. In that trading chat room, we trade. We provide real trade ideas and real-time market insights every single day. I trade. We do text and push notification. I apologize. Earlier, I said that we email trades out. We don't use no stinking email anymore. We don't use email because it's too slow. We don't use this, email has just become too slow. So we actually use text and push. How do we do push notification? We actually have the iOS and Android applications for your mobile device. Okay, so we use text and push notification, including in-out spreads. We will literally text out trades. We have 5 distinct trading portfolios. So you don't have to necessarily do in-out spreads. You could do duration trades. You could do black book trades. Okay, we have daily coaching sessions. So what's a coaching session? I'll give you an idea. Jeff Bierman, who's a professor of finance at Loyola, he does a coaching session for 1 hour per day. It's a topic. It's a timely topic. Okay. Last on the list here, but definitely not least, all the instructors will directly answer your trading questions via email. And I'll reiterate this because we're giving you access to a live trading room. We're pushing out trade ideas. We're giving you 5 different trading portfolios. We're giving you coaching sessions, which is continuing education. The instructors will also answer the questions. By the way, they answer the questions in approximately 24 hours. So you can't email us 5 minutes before. And I don't want to shy away from this. I want to come head on into it. People ask me this all the time, though. Can I email you and ask you a direct trade-related question? The answer is hell yeah. Ask me a question. I'll tell you if it's a terrible trade. I'll tell you if it's a good trade. Okay? Most of our guys here at TheoTrade, look at the instruction crew. You think this crew is new, right? Most of us have actually held brokerage licenses, Series 24, which is a principal broker dealer, okay? This is not our first rodeo. We're going to answer your trading questions via email. Again, we're going to give you access to an additional $997 in support, trades, and insight. Again, that's our second bonus, included in the second bonus. We're also going to give you access to 59 proprietary indicators and scans. Now remember, when I started tonight, I told you, auto expected move. I am going to give you that particular script tonight. I'm going to give you the URL here in about the next 4 or 5 minutes. Okay, so you're going to have the auto expected move. But we're going to give you all the scans. By the way, tonight, you sign up. You sign up for $497. Okay, this is not a membership. You just sign up for $497. You're like, what does that give me? It gives you 3 months. I'll detail that in a second. It doesn't charge you again. But we're also, from day one, going to give you every one of our indicators and scans. Why? Because you need them. You need them to be able to trade with us. We'll give you gravity points, RSI Laguerre, Quantix. Quantix I use every single day. NQ levels. Okay. Next generation squeeze, complex position trainer, IV rank versus IV percentile, unusual put options activity, sizzle scans, SPX expected move, and a ton more. These are the ones, though, that we use most frequently here at TheoTrade. But again, we give you those. And this is where I always say, there's some education firm that, oh yeah, they charge you, they'll charge you $500 per one of these scripts. And the auto expected move, we're giving you that tonight. That's the most complicated script ever compiled. Okay. Again, it's access to over $1,800 in indicators and scans. Now, just to kind of top things off, this is a bonus literally for tonight and tonight only. This is bonus 3. It's a live class. Okay. When we give you access to TheoTrade, as I said a moment ago, okay, we give you access to 3 months of TheoTrade. Well, guess what? The next live class, how do you think we got 92 classes? Okay, we just keep ripping out classes. And I'm doing the next class. And it's coming June 18th. When is that? It's next week. It's next Thursday. The live class, you will have access to the live class. So not only are you getting the in-out spreads class, you're getting 92 other courses. You're also going to get a class that I am currently putting this together for a while. It's bonds and interest rates. What really moves the markets. It is going to be, and it is currently now, critical to understand bonds, interest rates. You realize that the Fed is coming out tomorrow. It couldn't be more timely here. Bonds and interest rates. The movement in bonds is actually shifting markets day to day. It's going to continue to shift markets. And the more that the Fed tightens up the control on those, the more you need to know about bonds and interest rates. We put together a class for it. I am the trade instructor. The class is live. Now this one, it's unusual. It's going to be about a 2-hour class. I'm probably going to run closer to 3 hours, but it's on Thursday, June 18th, and it's during the trading session. The course is archived immediately, okay? And it'll have access on iOS and Android immediately. And I stress the immediate part because somebody goes, I can't make it on June 18th. I got something. It's fine. 2 seconds after the class is over, it's already archived. By the way, this class, what does it include? And again, it's coming. It's the third bonus, and it's only for tonight. When I say it's only for tonight, yeah, because the live class is coming next week. Okay, you got to enroll for TheoTrade tonight to attend the live class. And there's some background information we'll even give you on this class. Here's the class itself, bonds and interest rates. What really moves the markets? First of all, we're going to give you an understanding of the bond markets, how bonds can and will influence markets and all of your positions. Learn to read bond markets day to day, okay, and how these markets are going to influence your stock positions. What the yield curve is and why you should pay attention, obviously, to these interest rates. This is not just about your mortgage. Those interest rates are going to implicate everything. Discover how you can enter into a number of different defined risk bond trades. We're actually going to show you a little bit about trading bonds and learn why junk bonds is going to be an excellent indication and confirmation of future market risks. If you're not looking at junk right now, you're missing the bigger picture. See how changes in market regulations have also forced large firms into bonds and where catastrophic risks could lie in this marketplace. Listen, those are the 3 bonuses for tonight, and I put a lot of emphasis into bonus number 3 because I'm putting a huge amount of time and effort into the bonds and interest rates course. Okay. By the way, a little bit of what our members are saying. I've talked about in a couple aspects here, making some money. This was actually from Todd Summerall. Again, just a client. Apparently is a picture of his dog. Okay. Don't know if you remember, but I mailed you a few weeks ago and told you my delta was positive a couple thousand or more. By the way, to clarify, this was actually back in the March timeframe. I don't mind. I'm telling you, it's an older email. It's from March, right? My delta was a couple thousand or more. You told me smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. For your information, before Theo, I had no clue about Portfolio Delta. A big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. Well, thank you, Todd, because I am using it. I wanted to detail that for a second because everybody comes here from different walks of life. But the reason I like this email is because we will give you opinion. Whether it's right or wrong, we'll give you opinion. You want my opinion? Okay? You're paying for it. And you can email me and I'll tell you like, hey, you have risk. This is ridiculous. You got to get the hell out of here, right? The next one comes from actually Chris. This is March 26th. Okay. I've learned more in the past 4 weeks managing and defending my portfolios than I've learned my entire life trading. Okay. Nothing I've learned would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge, that's a strategy we teach, took large sting out of my long-term IRA destruction. You clearly don't have to be a teacher, but thank you for doing so. Stay safe, Chris. Last one I'm going to share with you, this one, okay, the March 16th. By the way, the March 16th is basically one of the bottoms of the marketplace here. This comes from Brian, okay, Don. Wow. I want to say thank you again for what you've taught me in the last 2.5 years. I bought into what you taught about risk twist spreads and duration positions and started to trade options almost a year ago. I missed out in the last market move up, okay? But the moment my IRA is up 14.8% for the year. Time out, okay? This gentleman's up 14% for the year, and it's March 16th, which is one of the most devastating crashes in recent history. In fact, it's the most devastating crash since 1929. What I've invested in TheoTrade has been so worth the money. Thank you. That comes from Brian. Listen, what we're doing here at TheoTrade, okay, it includes everything that you need to invest in trade. We'll give you classes, we'll give you coaching sessions, and email access to the instructors, a live trading chat room. Literally a live trading. I'll show you in a minute. It's a live trading chat room, live trades, indicators and scans, and we'll give you mobile access 24/7. It's everything you're going to need. literally everything. And if there's something that you feel like, I'm not getting it here, email me. Okay. TheoTrade, what we set out to build is the Netflix for traders. Name a genre of trade, and we've got it. I mean, we've literally built the Netflix for traders. You can even search our archives. Name a topic. It's in there. Okay? It's everything you're going to need to, again, trade and invest. Tonight, it's $297. So we just knocked the price down from $497 to $297 for 3 months. Okay? And again, it includes everything I just discussed. And I want to kind of detail a few of these aspects that I'm going to give you the site. I promise not to torture you guys too much longer. But this stuff's important. It's important to me. Listen, we're going to include the high probability in-out spread class, right? That's the spreads that we're talking about this evening. It's included. We're going to give you access to over 92 trading classes. They're all available immediately on demand. We give new monthly classes. Listen, highlight new monthly class. Guess what? There's a new monthly class coming. When is it? Next week. Live trading chat room. That's my bonds class, the live trading chat room. Real-time trade ideas, real-time market insights and analysis. We broadcast 6 hours per day, except on Wednesday, because Wednesday we actually broadcast for 7 hours. Okay, indicators. There's 59 proprietary indicators and scans. We do text and push notification of trade ideas in 5 separate portfolios. We have daily coaching sessions. Okay, that include timely topics in stocks, options, and futures, and the instructors will directly answer your trading questions via email. If you go now, it's TheoTrade.com/in, as in out, okay, I, and then N as in Nancy, I, N as in Nancy. So TheoTrade.com/I, N as in Nancy, okay, to enroll for this. And again, I want to clarify something before I go any further. Once again, it's $297 for 3 months. Everybody always asks me, what happens after 3 months? This is not an introductory price, okay? This is not a membership. We do not auto bill you. It's $297. After 3 months, if you don't want to do it anymore, let it lapse. It is what it is, okay? Listen, we do it this way because I don't like to sign up for even like gym memberships anymore. Because I don't trust them. I just don't trust them. You gotta sign up for a gym membership. How do you cancel a gym membership? I have to give a pint of blood and show up during a coronavirus to get out of my freaking gym membership. It's $297 for 3 months. If you don't want to do it after 3 months anymore, it's fine. We do not auto renew. We don't auto bill. If you would like to do this again after 3 months, this is not an introductory rate. How much is it going to be after the 3 months? Tonight, if you enroll tonight, you will lock in $297. So after 3 months, it's $297. What happens after 3 months from that? It's $297. Sign up tonight, it's $297. That's it. Okay? Go to TheoTrade.com/in to enroll. Okay? Just to top this off a little bit, we'll make it a riskless trade. Everything you're going to need to start trading from novice to expert, we'll put a money back guarantee on it. Now we do this, and I want to politely say this. We do this. We don't want anybody here at TheoTrade, anybody at TheoTrade that is not satisfied. By the way, satisfaction, okay? Hey, listen, that's a pretty big term. The money back guarantee. Trade with us over the next 3 months. If you're not satisfied, what's satisfied? I don't know. If you're not happy, okay? I get it. If you're not happy, email support@theotrade.com. Provide us the details of your trades. Receive a full refund. Listen, people, we're talking about $297, okay? Right now, we have over 5,000 plus, okay, current clientele of TheoTrade. So that's a lot of people, okay? That's why we have so many instructors here, so many individuals answering emails, okay, broadcasting 6 to 7 hours a day. But it's $297. And I reiterate, you need to be satisfied here. Okay, I don't care whether it's $297 or you paid $2,900. You need to be satisfied. And if you're not, okay, we'll give you the $297 back. You know, the stipulations we have. The stipulations have, you have to do 10 trades on in-out spreads over the next 3 months. We're going to send text messages of more than 10 trades using in-out spreads for the next 3 months. The next thing, your initial account value has to exceed $2,000. It does. Okay, that's part of the criteria. If you enroll for TheoTrade, you got to have an initial account value over $2,000, okay, to get the riskless trade. And again, we want to make this a riskless experience. It's $297, okay? But some people are hesitant, so we make it riskless. You have to follow the TheoTrade criteria for in-out spreads. Again, I love the stipulations over here. You cannot make up your own crap and come in here and be like, I'm not satisfied. I'm telling you right now, you follow what we do. You follow what you do, you're probably going to be very happy with us. Okay. Oh, and you have to provide us real account statements. This ain't paper trading, people. So if you would like, okay, you enroll right now. The first 50 people to enroll, it'll be a completely riskless trade. In fact, get into TheoTrade now. We're going to work with you directly. We have 50 spots tonight. 50 spots and only 50 spots in the TheoTrade riskless deal. And hey, listen, okay, I'm going to tell you right now. You want to know why we do 50 spots and 50 spots only tonight? Because we have to look back through all of those trades. I mean, people are like, it's 10 trades. So if you want the riskless deal, you do 10 trades. Hey, we have to go back and reconcile 10 trades from what? 50 different people over the next 3 months. You start to add it up. People, that's a lot of trades. So we do 50 riskless spots tonight. Okay. We answer your emails. It's unlimited emailing, mentoring. You want to email me? Great. Okay. Send us your trades. You can check your trades. You can say, hey, is this trade, is this right? Am I putting this trade together correctly? That's what I mean by we'll work with you directly. $297 riskless offer. It's never been available before with in-out spreads plus bonds interest rates, what really moves the markets. Again, we're not just giving you a $297 riskless offer with in-out spreads. We have a live class coming up, okay, on June 18th. And we're including that for the $297. By the way, there's no ancillary charges, nothing of any kind. And that's important. Listen, this is everything that you're going to get today. Again, I'm actually going to take you over to the site here momentarily. It's theotrade.com/in. But I wanted to reiterate, okay, all 3 bonuses in here. Again, the guide to small account growth with in-out spreads, right? Then we give you free bonus number 1. It's 3 months all access, okay, to TheoTrade. It's the live trading chat room, which is 6 hours a day. The archives 24/7. And its archives are searchable, okay? Text and push notifications. Trading indicators and scans. So if you want, all the different indicators and scans, we'll show you exactly where they are. Daily coaching sessions, okay? Really timely topics. Bonus number 2. We give you access to over 92 classes. And those 92 classes, there's day trading and swing trading and technical trading and beginner's options trading and advanced options trading and much more. In fact, okay, I think this is a perfect time to bring this into scope. Okay, and we're going to cruise over to this website in just a second. But I think it's an excellent time to display this to you here. Okay, so of course, as soon as I click on this, it's not working here. This is TheoTrade. So I'm going to take you into TheoTrade. When I say this is TheoTrade, okay, we're here to answer some questions, but this is TheoTrade. This is actually what the site looks like. There's a start here menu. Some of you are complete novices, like where am I going to start? But this is the live trading chat room. And down below over here, this is our clients actually talking to one another. Okay, this is our clients literally talking to one another. And by the way, there's still people that are in here, all right, even at this late hour. Why? Because the markets are moving. They move all night. Okay, but as I was saying a moment ago, we have all these different classes. Everything's searchable. This is the class archive. Right? Option classes and option newbie classes and technical analysis and day trading classes. But some people are like, this is too much. Where do I start? How about here? We have a start here menu. We're going to walk you through this. Okay. But again, I want to reiterate. Bonus number 1, 3 month access to this. Bonus 2, 92 classes. Bonus 3, that's the live class. What's really going to move the markets? It's bonds and interest rates. Again, if you go to theotrade.com/in. In fact, everybody follow me to this particular address right now, because this address, theotrade.com/I, N as in Nancy, this is where the auto expected move indicator happens to be located. So with that, I'm actually going to take you directly to this. Again, this is the guide to small account growth. All right, let me actually pop the web address back up here just to make sure everybody's got it, because somebody just asked me exactly what it was. Okay. Oh, by the way, somebody said, what are the chat room hours? Yeah, no, that's a great question. We start, okay, at 9:20 Eastern Standard Time. We go right to the close, which is 4 p.m. Okay. So we have the whole break during the day. We give you 30 minutes off during the day. We actually broadcast for 6 hours per day. So if you go to theotrade.com/in, by the way, right here, okay, click add to cart. Add to cart, it's $297 today. And again, you can kind of scroll through all the different bonuses that we discussed, but probably the biggest bonus here tonight, it's the live class that's coming up here June 18th, bonds and interest rates, what really moves the markets. When you click add to cart, And the reason that I'm taking you through this on the add to cart is I just want you to see it's a one-time $297. Okay, there's billing information in here. Okay, payment information. It's a single payment. Okay, of $297. But I'm also throwing it in here because some people go, you know what? I'll break it into two payments. You want to break it into two payments? That's fine. That's completely up to you. It'll save you an entire dollar that particular way, but it's a one-time payment. And that's why I put this in here as just single payment, because everybody's always so worried about like, it's a gym membership. Come on, nobody's ever had that experience. How do you get out of the gym? You don't. Here at TheoTrade, I can't stand that stuff. So there's no membership here. It's theotrade.com/I, okay, N as in Nancy. By the way, we're here to be able to answer some questions for you. Feel free to scroll down in here. If you scroll down to the bottom of this page, okay, right at the bottom of the page, here's the auto expected move indicator. And I promised you guys that I would take you to that particular link, auto expected move indicator. For those of you, after you enroll, you don't have to go download the auto expected move indicator. We will provide that to you. It's in the TheoTrade site. So again, it includes 3 months access to 92 classes. We include all the chat room, everything. In fact, here, I'm going to show you a little bit about TheoTrade, and then we'll take you back to this page. And yes, I'm going to answer a ton of questions right now. So I realize that that questions are coming. So hang with me here for just a moment as I'm going to get some of those questions. Again, I kind of say this is TheoTrade. You know, when I talk about the 92 classes, okay, as I said a moment ago, the classes are broken down into different groupings. You want day trading classes, trend trading classes. Listen, there's a genre, okay, for everybody here. And what I tried to do at TheoTrade is I'm an options geek, right? I admit it. I'm an options geek. I'm not a technical analysis guy. I don't look at a lot of charts. So I went out and hired, okay, some of the best, absolute best. I mean, Steve Miller, Jeff Bierman, Corey Rosenblum, okay, Brandon Chapman, okay. These guys, I mean, Jeff Bierman's a professor of finance. Technical analysis classes, bar none, spectacular archive in here. And I'm actually touting other people's classes, not my classes. These are our instructors here. Okay, you want to learn about Technical Analysis 101, the art and science of trend trading, introduction to pattern recognition, volatility indicators. It's all in here. But me, I'm an options geek. So what do I want to do? I always want to show people the option strategy classes. Why? Because people, we have an arsenal. You have access to every one of these classes from day one. Selling options for a living. Okay, guide to maximum edge trading earnings. The point that I'm trying to make here, if you can't get it done at TheoTrade, it can't be done. Because we've got everything. I mean, we put together a class on back spreads, volatility crash course, because volatility is hitting. We had to have a crash course on it. Guide to surviving and thriving in extreme volatility. These 3 classes, okay, then we actually put together controlling your risk. There's 4 classes. Guess what? We're going to add a 5th class. This is just the last couple of weeks. Why are we popping out so many classes? Because you need it right now. You need it. The bond class, the volatility crash course, back spreads, this is survival kind of stuff, right? This is all included in TheoTrade. As I said, if you're overwhelmed, you start here. Options 101, options 201, okay? Options 301. We built this literally a structured curriculum for you to be able to walk through. Then I come up here to what we call the member home. You should know that all of these archives are searchable. Type in any topic you want. Okay, you know, we were talking tonight about in-out spreads. Okay, so here, every in-out spread coaching, you want to see it, search it. Okay, when I say search it, there you go. In-out spreads, small account growth, in-out spreads, Q&A session, in-out spreads, reviewing the in-out spread. Okay, this is actually, I love this one. I did this one, the ins and outs of in-out spreads. Okay, we've got, again, a massive number of courses. You guys, I'm telling you, you're going to love what we do. And it's $297. I'm telling you, you're not going to go wrong for $297. And the first 50 people to enroll tonight, by the way, we don't have 50 slots open anymore. And I thank you guys for enrolling. In fact, I'll even call off because people always ask me who's in. Okay, I'll call off who's enrolled here momentarily. Go to theotrade.com/I, N as in Nancy. All right, a few questions that I'm going to answer. Let me just answer some general questions. By the way, I wanted to also share this with you. These are a little bit older, but good evening, Don K. Okay, as a multi-decade risk manager for one company, I worked for, and owning 2 other businesses of my own. I must say that your perspective on portfolio risk management is exactly how I attempt to explain those close to me with significant investments. Quantification via standard deviations, of near and long-term timeframes are critical considerations for responsible and successful endeavors, regardless of underlying market-related or otherwise. It was refreshing to listen to your perspective on the same today. Sincerely appreciate efforts. This is from Nathan R. And I just wanted to share that with you guys. TheoTrade is one stop for all things options. The content is rich, something for every level of trader. There are hundreds of archived seminars, coaching sessions, and course trading room access. Okay, the energy of the instructors is palpable. Okay, and the fact all the content, save for very few in-person sessions, is included. Okay, in the membership fee. TheoTrade is worth the money invested. I just wanted to share those with you. By the way, let's answer some general questions. Okay, some general questions. Then we're going to come back to some of your specific questions. So again, the web address, theotrade.com/IN. And there was a quick question that came into here. I just want to show you once again. As you enroll for this, somebody just asked in the chat room, you come to theotrade.com/IN. You have to click add to cart. Click add to cart. It'll actually populate a separate page. Okay, your billing information. And again, to reiterate, it's a single payment of $297. You could do 2 payments of $149. All right, onward and upward. Let me answer those generalized questions, and then I'm going to answer very specific questions. One of the first things that everybody seems to ask here at TheoTrade, what do I need? What do I need to get started? And part of what we try to build here at TheoTrade is we're going to provide everything. Okay, you need a laptop, and you don't even need a laptop anymore. You have an iPad, if you have an Android, like a tablet, you can trade off of those. And we have applications for your iPad. We have applications that you can do everything on. Listen, we have everything you need to get started from absolute novice to the most extreme. Okay. Number 2, and I reiterate this again, this is not a membership. We do not auto renew or bill you again. All right. It's $297. After 3 months, if you want to do it again, it would be another $297. Listen, number 3, TheoTrade archives everything. Every word that we say here at TheoTrade is archived. Literally, when I say every single trade that we do here, okay, is archived, right? Those archives are also available, literally, okay? Archives are available 24/7. So not only are we archiving it, we'll give you mobile access. All right. Next in the list, number 5. If you've got those questions, email us. Email us anytime. Receive a response within 24 hours. It's including trade-related questions. Again, I think a lot of firms probably balk at that idea, but we get it. Include trade-related questions. Number 6 over here, you're going to gain access to every course that we've done in the previous 4 years. Now it's 5 years, including classes, coaching, live trading sessions. All the archives are searchable. Name a trading topic, and TheoTrade has an archive on it. Number 7 over here, all the trades can be done inside of an IRA or retirement account. In fact, on a day-to-day basis, what do we got here in terms of IRA? I trade in my IRA. I'm actually going to show you my IRA, and that's one of the reasons I threw that in there. Number 8 over here, we at TheoTrade, okay, we can help you get approved for options at several major broker dealers. So if you got E-Trade, if you got TD Ameritrade, if you got Tasty, if you got, you name it, we will get you approved for options. Do not have any fear of that. Remember, tonight, okay, we are doing, again, 50 riskless trade spots are available. Listen, get results and take action. Enroll for TheoTrade now. There's absolutely no risk. There's no risk in doing it tonight. It's $297. And again, if you're not satisfied after 3 months, we'll understand. And I hope that, give us feedback. We want feedback. By the way, good or bad. I hope you guys, if you're satisfied with TheoTrade, come in there. Because a lot of people email me. They're like, help me with this trade. I get that. But also, if you're having good trades, okay, shoot us an email because we appreciate it. All right. With that, now I'm going to answer some of your general questions. Let's tee this up over here because somebody just asked me to pop this page back up. So by all means, there it is. Okay. It's theotrade.com/IN. Let me answer some other questions here that are popping into the chat room right now. And again, I appreciate you guys staying with me, and I again want to make sure that everybody's good to go. So, okay. All right, first question that comes in here. And as you guys are enrolling, feel free, fire questions in, and I'll stay here. Okay. All right. First question. Does expected move work on futures? Absolutely. Expected move from the SPX will translate to futures, but you can actually use the futures contracts themselves to extrapolate expected move. I'm a big geek when it comes to expected move. So yes, expected move absolutely unequivocally will transfer to futures. Okay. All right. The next question comes up here. Hey, Don, does TOS have option charts that can be laid over stock prices to see how different price movement affects the option price? The answer is yes. You can chart options on Thinkorswim. Yeah, it's not going to move the way you think it is because options decay, right? So theta decay is not going to do things that you think it's going to do versus the stock price, meaning the stock could go up and you could still lose money in the option because the option itself is decaying. So hopefully that helps out. Okay. Oh, I like this one. So what you're saying, if that trade, okay, goes against you, you'll not get called out and made to liquidate at a loss because you have time left. Okay. What you're referencing in that one is the in-out spread. The in-out spread has criteria to avoid all exercise or assignment. That's actually some of the detailed criteria for exercise or assignment. But I'm going to tell you this, okay? If you are in an in-out spread, which is exactly what we're going to, that's the course that I'm telling you, $297 for the in-out spreads course. After you take the course, literally, sign up tonight, you take the course tonight, okay? Email me first thing in the morning. I don't care. Spend 4 hours. Even if you're on the East Coast, nobody sleeps anymore. We're all quarantined. Nobody's going anywhere. Okay. Take the course. Email me tomorrow. You can say, I'd have paid $5,000 for the course. There's that much packed into 4 hours of a course. And it's $297, not just for the course, but it has everything else in it too. But you'll actually learn in the course that if you were assigned early in an in-out spread, what are you going to learn in the course? It's actually a good thing. Getting assigned early would be a good thing because you would be fully profitable. Okay. Joanne asks, is it necessary to have a margin account to trade in-out spreads? Joanne, absolutely not. You could have a cash account. You could have an IRA account. I actually have a trust, and I trade options also inside of a trust. So that's fine as well. Okay. Next one. How do you know when to do a call or put or buy or sell? So that is actually part of the course. So we have to save something for the class. How do you know? Do I do the call spread? Do I do the put spread? A lot of that is going to be a specific trade setup that we're going to teach inside of the class. Okay. So with that specific trade setup, it will actually walk you through. Okay. That'll walk you through how to structure the trade. Should I be bullish? Should I be bearish? We'll talk a little bit about expected move in the class as well. I think you guys will really appreciate that. Okay, here's the next one. For a $100,000 trading account, should not more than 1 to 2% be at risk for each in-out spread? What's a reasonable rule of thumb of risk management? That comes from Douglas. Yeah, Douglas, the class is going to cover precisely that. In fact, one of the levels, we actually display from anywhere from a $2,000 to a $10,000 account. Then it's about a $10,000 to a $50,000 account. Then a $50,000 to a $100,000 account, $100,000 to $250,000, and then $250,000 on up. And we'll actually give you the precise percentage levels. And it's actually going to be much smaller than you would have anticipated, Douglas. It's a very, very minute allocation. And you're going to find out that the more capital that you have, okay, the more capital you have, the more spreads you're going to do. And you just execute, okay? You'll execute those trades ultimately via good till canceled orders. Makes it a lot easier. Okay. Somebody was saying, they saw this. They go, you made 30 to 40% profit, okay? 30 or 40% profit, okay? You have to win 3 out of 4 trades just to break even. That's actually you're not seeing the full Monty of the in-out spread. You will during the class, okay? When I say you're not seeing the full Monty, yes, there are many trades that I'm only making 30 to 40%, but we're going to give you the ideal risk reward in the trade. So I explained this as a risk one to be able to make one proposition, but we're actually going to give you a structure of the trade that's going to help you, okay, further mitigate your risk. And I hope that that makes a degree of sense. But by the way, the 30 to 40% that you saw in those trades, you're only making 30 to 40% if you can make that in the first 3 days of the trade. Otherwise, you have to make X amount. I'm not giving you what the X is in this one. That's part of the criteria, man. It's part of the criteria. Okay, moving along here. Since you showed many examples of bailing early to take a profit, do you also bail early on the downside? So, Jeff, the answer is, okay, yes. All right. Again, we're going to define, Jeff, your risk reward out there. So by all means, again, we're going to define your risk reward. Again, it's theotrade.com/IN. I wanted to make sure everybody saw it because there was a couple of people again asking that inside of the chat room here. One or two more questions. Again, I want to make sure that I'm hitting upon everything. Okay. Got it. Got this one. Got that one. All right. A couple of names I'm actually going to read off. Those of you that are enrolling for the riskless spots, people are already asking here how many riskless spots are left. All right. It takes us about 4 or 5 minutes before I can actually see who's enrolled from this. Celeste C. from Colorado. Thank you. Tom G. from Florida. Thank you. Andre G. from Canada. By the way, if you are in Canada, Andre, we're actually going to give you a broker-dealer in Canada. You're not going to want to use who you think you want to use in Canada. So we'll give you a brokerage firm up in Canada that you should use because I feel bad. The Canadians, they got to pay a lot for commissions. It's all kinds of wrong. So Andre, we got your back on that one. Matthew S. from California, Scott T. from Minnesota, Rich S. from Utah, Ray M. from North Carolina. By the way, the names that I'm reading here, these are individuals that have just now enrolled. All of you are enrolled in the riskless trade spots. Chris H. from California, Gerard F. from Washington, Neil R. from Canada. Again, if you're from Canada, feel free to ask us about that brokerage firm. We'll take care of you. Catherine B. from Pennsylvania, George H. from Ohio. I'm going to butcher your name here. Okay. I can't get this name right. Yeah, from California. I'm going to call you RO from California. I apologize. There's just no chance I'm going to get that one correct. And I would rather skip over than butcher it over here. Greg C. from Arizona, Paul D. from North Carolina, Philip M. from Cali, Guy K. from Tennessee, Jimmy C. from Colorado. I think I got most of them right now. And again, it takes us about 5 minutes before we actually see it. Okay. Rigoletto from L from California. Rogoletto. I'm butchering it. I apologize in there. Again, I had to try. Okay. Oh, Tom S from Canada. So Tom S from Canada, again, Canadian. We understand. Because by the way, the Canadians, for those of you who don't know this, different broker dealers up in Canada, they make it a little bit more challenging. All of you are into the 50 spots that are left, obviously. You just ate up about, I think I just read off close to 25, 30 names already, and there's actually a lot more coming in here. Monique from Georgia. So, sorry, I missed you, Monique. You were not in there. You're not in there yet. Okay, we'll get you. All right. Will was saying, where was the URL? The URL for that indicator is literally right at the bottom of this page. The URL for the indicator is right at the bottom of the page, the auto expected move. So by all means, feel free to grab that. For those of you, if you've already enrolled for TheoTrade, you need not, go back and actually download that particular indicator. We've already got you taken care of. All right. I'm just looking over here. All right. For me, less is more is what I need. I like the in-out spreads and probably would not take advantage of most of the other stuff you're offering. Okay. Listen, with the in-out spreads course, you need some of the background in here. What you're going to find is, and what most people do, the in-out spreads course, and I like what he said, less is more. Okay. You're exactly right. But at TheoTrade, I hope you appreciate, we'll give you everything. Because we believe, and we really believe, that these educators that go out there and it's all about, hey, another class, and they pay another $500 here, $500 here. What you're going to find here at TheoTrade, I think you're really going to love what we do in the in-out spreads course. And it's going to make you actually direct you towards a certain genre of trade. And there's a few classes that we do in and around the in-out spread that's going to take you to a whole nother level. You'll find out real quick that you could do 4 or 5 classes just around in-out spreads. Okay, and you get some spectacular results from that. With that, listen, people, I've kept you way over the time, and I want to thank everybody, and thank everybody, of course, that's enrolled this evening. Go now to theotrade.com/IN, and also know, okay, that after tonight, if you ever need to get a hold of me, just support@theotrade.com. Again, support@theotrade.com. Put Don in the heading. I got you taken care of. Thanks everybody for joining us tonight. Have a wonderful evening. We'll be here in a couple of minutes into the chat room to answer a few more questions. Again, have a wonderful evening. Bye-bye.